With new and diverse partnerships, the world can achieve sustainable development. Countries have already committed to making this happen through the Sustainable Development Goals. Each goal targets a specific area that needs improving, and they are all connected. But achieving the goals requires resources. $5 to $7 trillion needs to be raised each year. And countries are figuring out how to mobilize and use that money. The public sector is taking a whole-of-government approach, working across different ministries and actors. And the private sector is already contributing significantly to the SDGs. But more needs to be done. There can be challenges in aligning different sources of finance with the SDGs. So UNDP is helping to bring together public and private money behind sustainable development. We use 4 different approaches to do this. We map out the landscape and bring various actors to discuss targeted solutions. We advise on ways to remove blockages, build links, and redirect flows to sustainable development objectives. We help countries mobilize more money and leverage private finance for the SDGs. Working with governments and businesses, we ensure efficient and transparent management of resources for maximum impact. To benefit people, to protect the planet, and to bring prosperity for all.
The CIIF, the Chartered Institute of Islamic Finance Professionals, the premier professional body for qualified Islamic finance practitioners. Since 1963, the modern era of Islamic finance has rapidly grown to become a complete financial system with a full suite of products and services. As Islamic finance worldwide continues to grow, global demand for qualified talents becomes increasingly critical. To address this need, Bank Negara Malaysia has formulated a series of initiatives to boost human capital development in Islamic finance, including the need for setting professional standards. In its Financial Sector Blueprint 2011 to 2020, BNM identified the Association of Chartered Islamic Finance Professionals, ACIFP, to set global quality standards for professional qualifications. To realize its mandate, the ACIFP has transformed into the CIIF as part of its plan to be the global reference point for Islamic finance professionals. The CIIF will establish a platform for shaping high-caliber talents by setting globally recognized standards in professional qualifications. Together with our codes of ethics and professional conduct, the CIIF aims to shape the development of each member towards attaining recognition and prestige as a chartered professional in Islamic finance. As a chartered professional in Islamic finance, any member of the CIIF is expected to be ethically grounded, technically proficient, and above all, professionally driven. Attributes derived from the CIIF's key professional values. In achieving its vision to become the premier professional standard-setting body for qualified talents, the CIIF will be focused on three key strategic thrusts: supporting professional development through continuing education, upskilling, and specialization; global outreach initiatives to forge international linkages, foster collaborations in talent development, strengthen the linkage between industry and academia, and promote cross-border mobility for professionals. Achieving industry recognition through the adoption of the industry-owned Islamic Finance Profession Charter. Recognition of the CIIF's members by global financial institutions, industry authorities, regulators, education and training providers as the key players driving the halal economy. Through the CIIF, professionals in Islamic finance will have a platform to access expanded opportunities to serve the global Islamic finance industry. Through the CIIF, the talent pool will receive a much-needed boost in quality professionals to cater for a dynamic and ever-evolving global Islamic finance industry. Professional talents, global opportunities, knowledge, integrity, service. The Chartered Institute of Islamic Finance Professionals.
Introducing the Islamic Development Bank's Center of Excellence in Kuala Lumpur, Malaysia. A collaboration between ISDB and Malaysia for the benefit of all ISDB member countries. The ISDB Center of Excellence in Kuala Lumpur supports the expansion of Islamic finance, halal industry, and science, technology and innovation across ISDB member countries and globally by leveraging reverse linkage and resources mobilization to capitalize on the expertise and resources of member countries. Moreover, the Center of Excellence provides 1. Comprehensive ecosystem development solutions. 2. Value chain integration. 3. Investments and business matchmaking. 4. Access to finance, and ultimately supports the expansion of markets that work for development. Capitalizing on the advancement of Malaysia in Islamic finance, halal and SDI, and building on ISDB capabilities and global networks. The Center facilitates the exchange of comprehensive development solutions, including know-how, technology, tools, and investments between Malaysia and other member countries, while ensuring a win-win approach. 5 flagship programs launched by the Center of Excellence to be implemented during 2021 to 2023. 1. The Islamic Finance Promotion Program. 2. Halal Industry Growth Program. 3. SDI Acceleration Program. 4. 2 support programs for reverse linkage and resources mobilization. Several strategic initiatives are under implementation, including the Islamic Finance Ecosystem Development Support, the establishment of Orcaf Properties Investment Fund in Malaysia, the scale-up of Islamic FinTech and Social Finance Solutions, Hash Funds Development Support, Halal Ecosystem Development, supporting the development and production of halal vaccine, the scale-up of drones and agriculture technologies, and the launch of the e-Gateway as a virtual matchmaking platform between solutions providers and seekers in the Centre's focus areas. To know more, engage with the ISDB Centre of Excellence in Kuala Lumpur.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. As-salatu wa salam ala Rasulillahi sallallahu alayhi wa sallam. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome everybody to the second day of the Islamic Finance International Conference, Connecting the Dots, Harnessing Islamic Finance to Accelerate the Achievement of the SDGs, brought to you by the United Nations Development Programme, UNDP. My name is Aizuddin, and it is my absolute pleasure, to be your MC for this event. Now, just to recap, we had a very engaging first day with captivating speeches and keynote addresses, particularly from the UN Undersecretary General and Associate Administrator of UNDP, the Deputy Governor of the Bank Negara of Malaysia, as well as the prolific Tan Sri Dr. Muhammad Daud Bakar. In the first session yesterday, we covered the commercialization, governance, and efficient management of Waqf and sustainability, as well as the role of the Islamic philanthropy in socio-economic development. Now, if you missed the first day or you only managed to catch a little bit of it, do not worry. The recording of the first day is already available on the UNDP Malaysia's Facebook page, and the same will be done for today. Now, once again, as a reminder, for CIIF members who are attending this conference, you will gain CPD points for your participation. Please forward your Zoom registration to membership@ciif-global.org to them. And this info will be available, or actually is available now, in the chat window. Now, before we get started though, let me go through quickly the agenda for today, which is, yes, on your screen. So right now, this is I'm just going through the welcoming speech, welcoming everyone. We will start with our session number 2 shortly, called Harnessing Islamic Fintech for Social Impact, where we will have Dr. Farouk Habib, Puan Roslina Ramli, and Dr. Muhammad Obaidullah as the panelists, as moderated by Ms. Sofia Karadima, and then followed by the session 3, which is called Impact Assurances and Measurement in Islamic Finance Sustainability Agenda, which will feature Ms. Sarah Lisa Orstavik, Nick Sharizal Sulaiman, and Mr. Muhammad Muazzam Mohammed. And as the moderator for that session will be Mr. Yusri Yusuf, So there you go. That's the agenda for today. Now, once again, let me remind our participants to please submit your written questions in the Q&A section below for all the questions related to the session or to the speaker. Please then state your name and organization, and to the speaker that you wish to address the question to. The moderator will then address the questions to the speakers at the end of each session. Now, as per yesterday's session, we did get a lot of questions coming in from the participants, and unfortunately, due to the time constraints, the moderator was not able to pose all the questions to the panelists. But inshallah, for today's session, hopefully we will be able to address all the questions, if not verbally during the session. Hopefully the speakers can type their answers on the Q&A window. So with that, let's get the second day up and running. Now, ladies and gentlemen, as the current pandemic has presented new obstacles, challenges, as well as opportunities within Islamic finance, how can the industry leverage on fintech to overcome these challenges and obstacles to serve the underbanked communities, as well as those who are most impacted or most vulnerable? Now, what are the new technologies being adopted in Islamic finance to identify the enablers for growth in Islamic fintech? How has the rapid growth of cashless transactions support economic growth and sustainability? Now, to help us answer these questions and more, we have with us first Dr. Farouk Habib. He is the co-founder and managing director of Alif Technologies. Second, we have Puan Roslina Ramli. She is the Director of FinTech and Islamic Digital Economy at MDEC. And third, we have Dr. Muhammad Obaidullah. He is the Lead Research Economist, Knowledge Solutions at the Islamic Development Bank, ISDB Center of Excellence in Kuala Lumpur. To moderate this session, please welcome Ms. Sofia Karadima, the Senior Editor and Researcher for Investment Monitor, focusing on financial services, ESG investing, and the UN Sustainable Development Goals, SDGs, if you don't know that by now. And she has reported on private equity, venture capital, private debt, and infrastructure, among other topics. Sophia is currently based in London after living in Chile, Denmark, Spain, and Greece. So without any further ado, Ms. Karadima, over to you.
Hello, and thank you all for being here today. It's a big honor for me to moderate this panel. So welcome all to the Islamic Finance International Conference. My name is Sofia Karadima. I'm a senior editor and researcher at Investment Monitor, which is a digital publication focusing on cross-border investments. This session is about harnessing Islamic fintech for social impact. I'm delighted to introduce you to our speakers today, and please feel free to send questions through the chat box below. So I would like to introduce you to Farouk Habib, co-founder and managing director at Alif Technologies, to Ruslina Ramli, director of Fintech and Islamic Digital Economy at Malaysia Digital Economy Corporation. And I would like to introduce you also to Dr. Mohammed Obadullaya, lead research economist, knowledge solutions at Islamic Development Bank Center of Excellence in Kuala Lumpur. So welcome all, and thank you for sharing your perspective today. I would like to start with Ruslina to discuss more about Malaysia's digital transformation. So to start with, since inception, MDEC has been the torch runner in driving Malaysia's digital transformation. So Ruslina, please tell us more about the current digital landscape in Malaysia and what are the government's and the regulators' efforts to serve the needs of served and the undeserved and the underdeserved.
Salam Sejahtera and a warm welcome to all participants who have dialed in from across the world. I'm extremely pleased to share MDEC's journey in how we have facilitated connecting the dots from Islamic finance to Islamic fintech in achievement of the SDGs. So allow me to set the stage by explaining what have been the top-down approach from the government. So naturally, the blueprints have played a very important role in the progressive stewardship of the government and also regulators in support of bringing together all key stakeholders, which is the regulators, the public sectors, and also the private sectors as well. All this was in support of empowering digital in facilitating products and solutions to the served and also the underserved. So as we know, the way forward out of poverty is to raise the level of awareness and education. And through technology innovation and advancement, this can now be done and easily accessible at the touch of a button. So one of the key blueprints that I would like to highlight was the National Strategy for Financial Literacy that was in 2019, that was launched in 2019 and to take us all the way to 2023. There were a lot of key milestones, but I'll just mention one in light of the time constraint that I have. So take, for example, so this was done way back in 2019. And one of it that was mentioned was only 17% of Malaysians have got life insurance and also takaful coverage. So, and through the announcement of the most recent blueprint was the financial sector blueprint 2022, it specifically mentioned that 17% has now increased to 42%, and this is all done through initiatives and the blueprint together with the help of public sectors and private sectors. So if I could also touch on some of the other key initiatives in support of those milestones is the increase in digital adoption from the micro SMEs, and we have so many fintech players that have facilitated this in onboarding a lot more micro SMEs to the digital space, and this has helped in terms of facilitating financial impact, social finance, in support of their survival in current situation. So as we embrace the new normal, everybody had to pivot. A pivot to technology was inevitable, and MDAC has been very supportive in championing the digitalization of Malaysia's economy, and we continue to support all our key stakeholders. Sophia?
That's very interesting to hear. My next question for you is, as a leader in Islamic finance, how did Malaysia leverage on its strong ecosystem in building connectivity to Islamic fintech and overcome the challenges that have arisen due to COVID-19?
Okay, so as you know, during the pandemic, liquidity was very, very tight. And so this was hard hit, especially to our micro SMEs, because the tendency was the bank was to tighten on credit financing. So in support of providing capital to businesses, to entrepreneurs who had to now pivot and work from home, alhamdulillah, the Securities Commission launched the peer-to-peer and also equity crowdfunding platforms. And through that initiatives, if I could just share some of the latest figures. So since the launch of the P2P framework in May 2016, more than 1.3 billion was raised as at end March 2021. So in 2020 alone, this grew by 20%, double-digit growth to 500 plus million, with an average ticket size of about $50,000 via 7,000 campaigns, and it touched across more than 1,300 issuers or potential customers. Out of that percentage, 36 was in technology sector and 97% was working capital. So you can see it's the individuals who needed money. It was your micro SMEs who needed money to support their continuation of the business and also their livelihood. Out of the 12 registered P2P platforms, 5 are Islamic Sharia compliant players. On the equity crowdfunding, similarly, the framework was issued in 2016. Close to about 200 million was raised at the end of March 2021. The growth alone in 2020 was almost 4 times, quadruple, 400+% to 127 million. And with an average ticket size of 500,000. So you can see the difference. P2P, the ticket size is a bit smaller, up to 50, whereas on the ECP, you could go up all the way to 500,000. And there were 80 campaigns touching across 78 issuers or customers. Some of the fintech players that I like to give a shout out to is who represent my Islamic digital economy fintech players are my colleague. The founder is Tengku Dani. So he's done an amazing job. And how his stewardship in terms of proactively engaging his customers to choose Sharia compliant has been very remarkable in terms of providing support in growing Malaysia's Islamic digital economy. And we have a lot more other newcomers coming on stream in facilitating more access to funding. So right now, the current ongoing discussions that we have because of the pandemic is seeing how we can mobilize zakat and also wakaf in support of the revival of the economies. So if I could just quote some numbers, in 2019, Wilayah Pusatan, which is the capital city of Malaysia, close to about 700+ million was paid in terms of zakat. In Selangor, which is also one of the biggest states, more than 500 million of zakat payments were collected. So all these monies can then be used in support of asnaf. Asnaf means people who are in need. So I have fintech players, like for example, MadCash. MadCash is a fintech platform that helps empower women entrepreneurs. So the platform has to date onboarded close to 300 women. The ticket size is about, on average, about 2,000 ringgit. So if we can connect the dots in facilitating, because some of those women will actually be asnaf, right? So alhamdulillah, MDAC will be championing our very first industry dialogue on social finance. So it's a closed door session with captains of industry. So the likes of the various lembaga zakats will be there. The likes of Malaysian Takaful Associations also be there. We've got representation from regulators and other key stakeholders to see how we can mobilize these social funds in support of my fintech community, who can provide that digital platform. So ultimately is through zakat intervention, if I can increase a woman, my women entrepreneurs disposable income from 1,000 ringgit to become 8,000 ringgit, that is what the story is, and that's what the journey is. And through that digital connectivity, together with everybody's support, having that top-down approach that I spoke on earlier, which was your financial literacy, and also the My Digital Blueprint, everybody working together hand in hand, we would be able to meet everyone's objectives.
That's ideal. And I also really like that you mentioned the example about how fintech can promote women and their potential, like the women enterprises. So I think this is a really good point. The next question for you that I would like to ask you is, how have the key stakeholders, like the government and the regulations, encouraged the adoption of new technologies in Islamic finance? And could you please share some innovative solutions and trends?
Okay, MDEC, we've had a very strong 25 years relationship in building ecosystem partners in support of the country's digitalization. One of them is working with regulators, looking at how we can innovate, how we can encourage, nurture new ideas in disrupting the current Islamic finance landscape. So I'd like to share 3 core platforms or accelerators that we have embarked on. So one is the FICRA accelerator. This was done together with Securities Commission in looking at innovative solution for Islamic capital markets. So from that accelerator, there were 7 fintech companies that were shortlisted, and the lady that I mentioned to you earlier, Matt Cash, was one of those shortlisted entities. And then we also have the Royal Award in Islamic Finance, and you probably saw the advertisement earlier. So MDAC is one of the partners in support of the Royal Award Islamic Finance Impact Challenge. And what we do is we funnel all our fintech companies. So because we've been around for the last 25 years, we've got a rich history and relationship with the tech ecosystem, which includes fintech as well. So looking at how the existing ecosystem that we have now in support of the problem statements that the Royal Award is promoting. The other platform which I would also like to raise is the iConnect FinTech in Islamic Finance, the neutral parties in CIF. So this is a 4 million matching grant from MOSTI, Ministry of Science, Technology and Information, together with Academy Science Malaysia. So this is the very first initiative that is looking to connect, again, is a holistic approach from the government, from the private sectors, from the government bodies, which includes MDAC, in support of bringing everybody together in looking at 2 core problem statements, which was one, the distribution and also circulation, efficient circulation of zakat and wakafs, and also the digitalization of Islamic finance. I know I'm running out of time, so I'll just stop there and then we can circle back to the other questions, Sophia.
Thank you very much for giving us your perspective today. You have shared several interesting insights with us. So the next part of our panel is going to be about 2 very interesting presentations from Dr. Farouk Habib and Dr. Mohammed Obadullah. So I would like to start with you, Farouk. Welcome and thank you for your presentation today.
Thank you so much, Sophia. It's a pleasure to be here. I would like to thank the organizers, and I think that it's an honor for me to be in this panel. Let me just start my presentation without further ado. then I will be just keeping it very simple and short so that like we will have more time for interactive session, inshallah. So I am dialing in from Dubai, and as you already know my name, so I will just move on to my second slide, please. Next. Yeah. So within this slide, actually, I would like to show that Maqasid al-Sharia, the objectives of Sharia, are highly aligned with UN SDGs. You can see in this slide that all the 17 SDGs are actually aligned with the Maqasid al-Sharia in different categories. For example, the objectives of Sharia talk about property, the protection of property, mal, protection of intellect, life, religion, and family lineage. And accordingly, you can see that like how they can be translated into our world, today's world, and how they can be implemented. So I think that there is a high synergy over there. And in fact, like what would I say is that like the Maqasid al-Sharia can be seen as also the universal objectives, and SDGs can actually are helping them to be achieved. So, and I would like to say that, like, in fact, Maqasid Sharia also include other important goals and dimensions as well. These are related to justice, ethics, character, and humanity. So I believe that this alignment will help in better understanding and applicability of SDGs in Muslim societies as well. Because when we are talking about SDGs, it's not only coming from different organizations, governments, etc., but also from a religious perspective, we can see that like it can be adopted, accepted in the Muslim societies. Next. So, but right now we have seen we have been experiencing a world with COVID-19. There are more cases than we expected actually. And if you look at the map, this shows the annual GDP, real GDP in the world in 2020. So if you look at it, like from the dark green region showing 3 to 6% growth in the GDP to all the way down to -3% in dark red areas. So what we have seen that it was only a COVID-19 virus, which has turned into a health crisis, turning itself into a global pandemic. And then we had some spillovers as well. Next, please. So if you look at it, that those global health crises also posed challenges of social and economic issues. For example, we have seen unemployment has been rising. So if you look at the map, you can see from the dark green region showing less than 5% to all the way up to more than 20% in rate in the dark red regions. So this is basically the unemployment rate, which is rising. And you can also see the inflation rate. It's another big issue. So you can see that like from the dark green region showing less than 0% to all the way up to more than 25% in the dark red region. So this is a very multifaceted challenge we have been faced, and what we see is that like this is the world we are facing today. Next. But I think, and this also has impacted not only the conventional financial sector, but also the Islamic financial sector. So if you see in this slide that though the value of Islamic finance assets increased by 13.9% in 2019 from $2.52 trillion to $2.88 trillion, but due to the pandemic impact and the crisis of COVID-19, the value of Islamic finance assets did not show any growth in 2020. It is still, and we were expecting that it will rebound and grow at a 5 years CAGR of 5% from 2019 onward to reach $6.9 trillion by 2024. But the recovery is still very, very slow. But what I would like to highlight also here, that the current situation should be used as an opportunity for the Islamic financial industry to promote the social finance instruments of Islamic finance that would achieve both social and economic development. And like I have said before in previous slides, that we are facing a global challenge over here. So I think that this has accelerated the demand for social ESG and SDGs driven products and services, and also the mindset itself. So there are steps taken, measures taken, and also some of the initiatives taken in different regions. Rosina has already highlighted some of the steps taken in that direction in Southeast Asia and other regions. Talking about GCC, I mean, there has been a lot of development in the form of ESG, SDGs, the products and services. For example, like some of the initiatives are like DFM, Dubai Financial Market, released a guide on ESG in response to growing demand from investors for comprehensive ESG reporting, as they increasingly factor such data in their decision-making processes. Also, there is an MOU which was signed between Dubai Islamic Economy Development Center, DIFC, DFM, and Climate Bonds Initiatives to collaborate on growing the offering of green sukuk and expanding the sector itself for the benefit of the whole society. Next, please. So right now, what I have seen is that although there are some initiatives taken in the traditional Islamic financial sector to deal with the pandemic situation, but I believe that Islamic fintech itself is a very, very effective tool. The sector has a lot of potential to decrease actually the cost, and also reduce the inefficiencies already rampant in the traditional sector. So if you look at the market size of the Islamic fintech markets actually globally, so you see that like Saudi Arabia is having like $7.9 billion market size, and Malaysia is there with $3 billion market size. But amazingly, I would like to highlight also that if you look at the global Islamic fintech index, which cater for like different indexes, for example, like if the ecosystem is conducive or not, then Malaysia comes first, and there is a high demand for the Islamic fintech products and services also in those regions. Interestingly, I would also like to highlight that in the top 20 countries, there are some non-OIC countries as well, like for example, UK, USA, Singapore, etc. So which is also shows that there is a demand for Islamic fintech products and services outside the traditional regions. Next, please. Currently there are total 241 Islamic fintechs, and they are categorized in different categories. For example, raising funds, deposits and lending, wealth management, payments, and alternative finance, which are basically the leading categories, and they form like 77% of the Islamic fintech firms. While we see that like there is a very low volume of like 0.7% of global fintech transaction volume, Islamic fintech in OIC countries poised to grow at 21% CAGR through 2025. So what we are expecting is that the market size in the OIC was $49 billion in 2020 and is projected to reach $128 billion by 2025. And I would like to also highlight that Sub-Saharan Africa, MENA region, and GCC especially, I mean, there are so many gaps across the region and across all the categories of Islamic fintech. So it's particularly social finance. So I think that this is a very huge gap. At the same time, it also gives us the opportunity to increase the focus on Islamic social finance. I'd like to also highlight that Sub-Saharan Africa, MENA region, and GCC especially. Also, if you look at there are so many gaps across the region and across all the categories. Next, please. So if you look at the market players at the moment, so there are only 12, and I think that this is a very high, very small universe at the moment what we have. I believe that although like this report has not included all the market players, but still I believe that there is a huge gap in it. So in keeping with the demand for digitalized services, financial institutions are modeling and revamping their services to provide more efficient and convenient customer service experiences. And I think that that will keep customers engaged and build a profitable relationship. Moving forward, I would just like to say that social impact investment initiatives that are aligned with ESG and SDGs continue to gain traction in Islamic finance because they have become more critical during the pandemic. This can be viewed as an opportunity for all stakeholders to contribute through the utilization of Islamic fintech and social finance tools. Lastly, having several Sharia-compliant social sustainable investment opportunities available I think that it will give investors a wide range of options. And it's not only about catering the demand side only, catering the supply side only, because there is a huge demand, because more investors are leaning towards these options as they do not want to do well only in terms of the profitability, but also in terms of social responsibility and ethics, including proper alignment with the universal objectives of Sharia. So this is basically the presentation, and I would love to have any questions from the participants, from the moderator, inshallah. Thank you so much.
Thank you very much, Farouk, for your presentation. It is indeed an invitation. And I would like now to ask Mohammed for his presentation, and we can discuss more questions about your presentation later on, Farouk, during the Q&A session. So I would like also to remind to our audience to send questions through the chat box for our panelists today. So Mohammed, I would like now to turn to you and to hear more about your presentation.
Thank you, Sophia, and very good morning and good afternoon to all the participants. Assalamu alaikum wa rahmatullahi wa barakatuh. And today's presentation is basically I would like to underline a few key points that run through the various slides. Basically, and I must thank Dr. Farouk for that first slide, because it coincides with that of mine, so I will not repeat that. Basically, the first point that I would like to underline is a kind of confluence that exists between what we call maqasid al-sharia and the social and the SDGs. This is what really gives a tremendous opportunity for what we call Islamic sustainable finance. And when we see the Islamic finance sector as a whole, of course, we don't have to get into the history of how this sector has evolved. But of course, the mainstream Islamic finance, as we understand, Islamic banking, Islamic insurance and takaful, Islamic investments, these are the mainstream ones. And to follow them, though these are historically rich institutions, but mainstreaming of Islamic social finance has been a late starter, I would say. But it gives tremendous opportunities because of the perfect mapping, the perfect alignment between the sustainable development goals and the goals of what we call the Islamic social finance sector. It doesn't rule out the possibility, of course, that the Islamic commercial finance sector has any less significant role in sustainable finance, certainly not. But what I'm driving at is a perfect alignment where the goals, they merge completely. There is a convergence of goals between the social finance institutions, as we understand, Zakat, Awqaf, or Qardi Hasana, the not-for-profit sector. They have their objectives very clearly, very clearly aligned with what we understand as Sustainable Development Goals. When it comes to Islamic commercial finance, of course, we do find a possibility of commercial consideration, sometimes coming into conflict or a trade-off with social goals. And we need the kind of enabling environment, the regulatory framework, and the right kind of infrastructure, basically to ensure that the commercial ones also, pursue social goals. They also work for social good. So there is this fine line of difference. So I will not deal with more on this particular slide. It basically talks about the alignment, and a lot has been written, and there's a kind of consensus now that there is a perfect alignment between most of the Sustainable Development Goals and the sub-goals as we understand, and the 5 maqasid as we know. Next, please. Now, when we look at the mainstream Islamic financial institutions, we know that compared to the conventional space, the entities in the Islamic space have been pretty slow, and we know that if you look at the data, it is still not very encouraging, in the sense that the first green bond in the Islamic space, as we know, it was introduced a decade later than the conventional space, and green sukuk has been a late starter, but yes, we are seeing more and more issues coming up, but still a lot has to be done. And if you look at the contributing factors behind the slow adoption, which has already been discussed by many other speakers in the form of challenges facing sustainable finance by the Islamic financial institutions, perhaps the challenges relate to regulatory environment. We still don't have the frameworks which will give the required push in most of the Muslim countries. If we talk about the IDB or OIC member countries, there are a few countries there, perhaps Malaysia, Indonesia, and a handful of countries which have tried to build come up with a framework, because of which, and also there are not enough, I would say, incentives for the players to go for sustainable finance, because there could be a trade-off between what we know the basic considerations of profitability and doing a social good, and that is where you need the right kind of incentivization of action by the mainstream players. And you also have this cost of compliance and also disclosure challenge, because with additional, if you want to go for a ESG finance, the cost of disclosure is an additional cost element that you have to consider, in addition to the basic cost of Sharia compliance as well. So this becomes a cost to the players, and accordingly, you have to provide the right kind of additional incentive for these players to go for Islamic sustainable finance. Next, please. And of course, opportunities are staring at our face. We have also talked about the various opportunities that are there. We have the pressing need for meeting the financing gap for the SDG targets. And we have the impact of the pandemic. This has been talked about as well. We need huge amount of funds to recover, to rebuild infrastructure, and all these, they come within the definition of doing something, doing social good. And we have recently seen the impact of COP26 on the policymakers across the globe, and how at least several OIC and ISDB member countries have gone for this Glasgow Financial Alliance for net zero. So we are perhaps going to look forward to a lot of enabling policies in different countries. Next, please. Next slide, please. Now, in terms of meeting the challenges, again, some of the solutions that are offered in different fora, like you need a future-ready workforce who are well conversant with SDGs and the metrics and how to move towards achieving those kind of impact. And one of the solutions is that's what we are going to discuss today. That's under our discussion today is leveraging technology. And we have this emerging technologies like blockchain and AI, and they do offer new opportunities or solutions to meet some of the challenges that face this sector. But in my presentation, I'm basically focusing on the untapped sources where as I underlined, there is a perfect congruence between the objectives of the Sharia and the objectives of the institution itself. And we are talking about zakat, sadaqah, and waqf. And we know that sources, if you look at the potential, we still don't have very solid data to back up our claims. But then there is a general agreement that, at least two studies that are widely quoted, one by the World Bank and second by the Islamic Development Bank, which basically come to a similar estimate of about $550 billion US in terms of the potential of zakat alone. If everyone who is liable to pay zakat pays zakat in time, then that's the kind of potential. Compared to that, we have the various IDB and ISDB research studies, which try to collect data on an ongoing basis from different member countries. And if you add up the actual zakat collected in different countries, it amounts to roughly about 10 to 15 billion US, which is 2 to 3% of the potential. Now, you can see this as a big challenge or as a big opportunity, because if 97% or more than 97% of the zakat still remains untapped, I think that's a big opportunity. And that is where I think, for very good reasons, fintech has, in the initial Islamic fintech entities, they are focused more on this sector. They have the initial crowd funds, the initial blockchain applications. You find most of them focusing on the Islamic philanthropy sector, and this is the reason, because this is where there is the maximum possibility of streamlining the things and achieving the potential. Next, please. For Islamic social finance institutions, we know the identification of the beneficiary, that is the single most important factor, and that's the single most challenge in front of the zakat and awqaf and the social finance management institutions. And this perfectly aligns with the SDG 16.9, which talks about bringing legal identity. So identity of the beneficiary and being the most critical element, and we know how this becomes a big challenge more in the context of internally displaced persons, especially we are talking about humanitarian finance and we are talking about social finance, especially in the context of zakat. It is a Sharia stipulation. There is no way of getting around it. So you have to ensure that the people who deserve, who have been identified as eligible beneficiary, benefits do go for them do flow into their hands. Similarly, in case of awqaf, we know the stipulation by the waqif or the endower, that becomes a kind of legal obligation for the awqaf management entity to ensure that whatever is the intended purpose, that is met eventually in the form of the flow of the benefits. So in a nutshell, or in very brief, the identity becomes very important. This is where technology has been playing a major role. Initially, we saw P2P finance, P2P crowdfunding, where of course, let's say the zakat payer or the donor, for the first time, he comes to learn about the end use of the funds. And that is why you see the proliferation of crowd funds in the Islamic space. And these things can be still improved a lot more in terms of more transparency, in terms of better utilization, in terms of better Sharia compliance, which basically will add to the realization of the potential. If you meet the Sharia requirements better, you always have a chance of enhancing the kitty, enhancing the zakat and the funds realization. And the second thing is the reduction in delays and cost of remittance. This is also is a matter of grave concern for the zakat donors or the Islamic social finance providers, funds providers. And this also perfectly aligns with the SDGs, which target to bring the cost of remittance down to below 3%. And this is eminently possible with the use of cryptos. I don't have to elaborate on that. This has been tested and proven that you can instantaneously transfer funds at almost zero cost with the use of cryptos. Next, please. Whereas we can use technology to enhance the effectiveness and the efficiency of the Islamic social funds, we can measure impact. We can measure impact based on milestones. We have seen the emergence of, in the Islamic space, recurring charities, platforms. I'm not going to name them. There are a handful of them, actually. These recurring charities based on milestones achieved by the project implementation agency. There is a periodic release of funds under an overall large commitment. Now, you can clearly see here that this is something that the donor likes. The donor likes to ensure that though he has made a large commitment, but there has to be milestones, and then these milestones he must get very clear and transparent report, and he must be told how his funds have been utilized. The second point where technology is is being used is to mainstream and institutionalize and unitize, bring together charitable and benevolent action. We know that the Awqaf sector depends on funds as much as it depends on volunteers. So we cannot understate the importance of the human element there. So there are platforms now in the Islamic space which bring volunteering as well as donations together for a single project through its objective measurement. And again, here Islamic cryptos have helped achieve this goal. Then you have the introduction of social cryptos as a mechanism for incentivizing actions. We have platforms where the very creation of impact is objectively measured and tokenized, and this becomes a kind of when you create an exchange for transfer of such tokens, then you are actually creating a market in this kind of this kind of impact. We have all heard about carbon trading, but when it through these platforms now it can be taken right to the micro level, not at the level of let's say governments or large institutions, but right to the human or to the individual level. And as a result of that, we have possibility that you enhance the efficiency and effectiveness of and you incentivize both the process of mobilization and allocation as well. We know that benevolent driven resources are scarce, even though there's still, as I said, 97 still remains at least for zakat unrealized. So this is a huge opportunity where even a marginal improvement in efficiency, in transparency, and in immutability. For example, in Awqaf, is a serious concern that there have been widespread reporting of loss of Awqaf properties, loss of Awqaf assets, and this is a global problem. This is not an individual problem, or it's a global problem, and there have been estimates, very clear estimates of research based on research as to what has been the extent of this loss of Awqaf assets. Now, this loss has taken place primarily because of poor documentation, because Awqaf assets are by definition they have a very long life, either perpetuity or a very, very long life, and the donor normally he is not existing throughout the life of the project, going by the very definition of that, to ensure that the Awqaf the benefits flowing out of the endowed asset indeed get in the hands of the beneficiaries. So this is why you have preservation is very important here, and preservation of the documents, the Awqaf deed, and the transparency about it. Now these things can be brought about through technology. As we know, blockchain enables all that. I don't have to repeat that. Next, please. Yeah, this is one, if there is time, I think we will not have time enough to go for the next slides. I will end with this particular slide. Sorry, previous one, please. No, previous one, please. Yes. So this is the platform where you actually measure impact, social impact, and then you go on to facilitate the exchange of impact units by converting, the impact using different metrics into impact-based cryptos or social cryptos. Next, please. Yeah, so you convert the impact measured against specific metrics like carbon footprints, or they could be ambulance miles, they could be kilowatt hours, into green or social cryptos. And then the project, an existing project which is already into these fields, which has created such impact, can now earn these social cryptos and then go on to the impact exchange to liquidate them. So this is what will enable them to create a market, and also to readjust, to rebalance their risk-return impact profile. And at the end of the day, we know that by bringing such flexibility in the market, liquidity in the market, we are going to enhance the overall efficiency of the market. I think the time is up, so that we can take the questions, inshallah. Thank you very much.
Perfect. Thank you very much for your presentation, Mohammed. Now it's time to move on to the next part of our panel, that is the Q&A session. I would like to ask our audience to keep sending questions. So the first question that we have received is about what type of regulations and legal framework is available for Islamic social fintech. Who would like to take this question?
May I, please?
Yes.
Thank you very much. In the field of Islamic social finance, I think there's a huge divergence. There's a huge divergence. Country-specific, I would say, frameworks exist. You don't have a global standard as far as the regulatory framework is concerned. We have the Sharia rules, certainly. And the Sharia rules, there is a growing standardization. There is no doubt about it. Over the years, our Sharia scholars have met and they have come up with kind of standardization in the rules, though there are some divergences across different schools of thought. But we do see a kind of convergence. When it comes to regulations, somehow we are somehow tied with our own history, especially when it comes to Awqaf sector. And Awqaf has a very, very long history in different countries. And these are all, I would say, influenced by their own historical factors. For example, the entire Indian subcontinent, whether it is India or Pakistan or Bangladesh, you have a very similar kind of legal framework because they were all ruled by the British. You come to Southeast Asia, you have a very similar kind of structure for the Awqaf regulations that exist. For example, Malaysia has its own unique, regulatory framework for zakat and Awqaf, and where you have a sort of, a kind of parallel system that exists. You have the state Islamic religious councils. They look after, everything that has to do with Islamic social finance, and the mainstream entities again have to really tap this sector with the help of the state Islamic religious councils. When you come to go next door to Indonesia, you have a completely different kind of structure. You have, the non-profit organizations. They have a free hand to collect and to mobilize and to manage their zakat. Of course, there is an overall regulatory framework which governs that. Similarly, you go to other countries like India, for example. When it comes to zakat, it's a free-for-all. Anybody can collect zakat. Anybody can distribute zakats. So essentially, we have seen a lot of divergence, and which are influenced by the historical factors, the way they have evolved. Only recently, we have seen attempts to kind of standardize, at least in the field of Awqaf. We have seen Islamic Development Bank taking an initiative in coming up with a uniform standard legal framework for all kinds of Awqaf. And we are seeing a slow adoption of this framework in different countries, like Senegal, for example. They have adopted this framework. So we are seeing more of convergence coming in this particular field, but as yet, there is a difference. Country-specific frameworks are they vary.
Perfect. Thank you very much for explaining us more about this topic. I would like now to ask more about it, Farouk, if you would like also to add something about this.
Yeah. So what Dr. Obedullah has mentioned is completely true, that we do not have specific regulations and legal framework and also guidelines for Islamic social fintech, actually. But what I have seen is that some of the areas within this GCC regions are emerging with Islamic fintech or fintech regulations in general. For example, like we have ADGM, Abu Dhabi Global Market, we have DIFC, Dubai Islamic Financial Center, and in Bahrain also a lot of things are being done at the central bank level, that we have sandboxes for fintech startups. So these are actually encouraging initiatives. But I just want to agree with Dr. Obedullah that we do not have specifically regulations for Islamic social fintech. That becomes very, very niche area. So I do not expect even in the near future that we will have specific regulations for that specifically as well.
Perfect. Thank you very much for your answer. There is a little bit of echo. I don't know if we can do anything in order to minimize the echo, but our team can check more into that. The second question that we have received says, how would regulators like the central bank be part of supervising these Islamic fintech companies? Some of Islamic social finance instruments, such as zakat or waqf, is pure fee of religious council of the countries. What is your opinion about that? Who would like to answer these questions? This question. Maybe we could start again with you, Mohammed. Oh, no, maybe we can start with Ruslina, and then we can go to Mohammed. Ruslina, what do you think about it?
Okay, yeah, so if I could, so the question was, how does central bank play a role, right? So
Yes.
From the regulatory sandbox on fintech that was issued in 2016, MDEC together with Bank Negara, we launched the fintech booster. So if you just Google, fintech booster, MDEC, it will take you to a landing page. This is in support of Bank Negara's effort in trying to promote more thriving ecosystem for our fintech players. So there was a questionnaire that was released to look at what were the industry pain points, and the feedback was 3 core areas, which is 1, legal and compliance, business model, and also technology. So in support of the first pain point, in August 2020, we released the first pillar, and we managed to rope in close to about 11 lawyers and also Sharia advisors. And these expertise provided their one-to-one consultation on a pro bono basis in support of the needs of the fintech players. And we're hoping to also launch Pillar 2 and Pillar 3 that looks at business model and technology in the coming this year. So this is the support that Bank Negara, together with public agencies like MDEC, look in terms of facilitating this. On the social finance bit, as you know, we will be announcing who will be our incumbent for our digital bank. There are 5 licenses up for grabs, which includes conventional and also Islamic. So when you look at social finance, I mean, when you look at the objective of the digital bank, it is in support of providing solutions for the underserved and unserved. So when you look at conventional and also Islamic, it's agnostic, right? So how can Islamic digital bank create that differentiating factor? Is through zakat and wakaf, and that is what social finance is.
Perfect. And Mohammed, what is your view about that? Would you like to add anything else?
In the context of Indonesia, where I come from now, we have seen this central bank taking a very proactive role. Am I audible?
Yeah.
Yeah. I'm sorry, my internet connection was a bit unstable. In the context of Indonesia, at least, we have seen the central bank, the Bank Indonesia, taking a very proactive role in the context of Islamic social finance. Proactive role in the sense that they have worked together with the zakat, apex zakat bodies like Badan, Baznas here in Indonesia. Similarly, you have the apex body for Awqaf, Badan Wakaf, Badan Awqaf Indonesia, BWI. Now, together along with many universities as well, leading universities from Indonesia, you have these joint initiatives to set standards. So when it comes to setting standards, we have seen all these institutions or apex level bodies that are concerned, that are responsible for specific sectors. They come together because that's a basic requirement. If you're talking about Islamic fintech applications in social finance field, so you have to take care of all the stakeholders. You have the fintech, when it comes to use of cryptos, that they're being used or misused as medium of exchange. In certain countries, it's not allowed. Some countries permit this. So if we are going to resolve this kind of issues, the uses of financial fintech, whether for cryptos or to address various social tensions relating to transparency, relating to accountability, we know that these technologies have got a massive use. So there, we need to bring all the stakeholders together, and that's what happened in Indonesia. At least I've seen. We have these core committees coming up with core principles for zakat management, core principles for waqf management, and hopefully we are also going to see a similar initiative for Islamic fintech. As of now, we still, don't have anything concrete as such, that fintech applications, but we do have, you go by the same trend, you can very well see that the stakeholders coming together and coming up with standards that are applicable to fintech applications for social finance as well.
Perfect. And Farouk, would you like also to add something about that?
No, thank you. I'm okay.
Perfect. So I would like to ask you another question then. From your experience within startups, what are the key opportunities when it comes to Islamic fintech? And for example, what opportunities exist in the GCC region?
I think that there are a lot of opportunities already available. If you look at from the demand side, there is a huge demand for customized technology-based financial products and services overall. I mean, be it commercial or social. But there is a huge need for social impact products as well. Why? Because as Dr. Ubaidah has already rightly mentioned that there is a huge wastage of resources, zakat resources. I mean, it's a huge money. I was studying one research and I found out that even with only 1/3, which is with only zakat, which is one tool of Islamic social finance, you can actually achieve 1/3 of the target in achieving SDGs actually. So you can meet up with the financial requirement with only one tool, which is zakat only. But the problem here is that a lot of resources have been wasted because there is no record, there is an inefficiencies also there, and sometimes the lack of manual, lack of digital tools and data availability, we end up with being inefficient. So I think that there is a huge potential there. On the other side, if you look at was also mentioning about social cryptos, etc. So these are the things which can basically proliferate the Islamic social finance sector. Why? Because even if you look at only India and Pakistan, these two countries rank second and third respectively according to the crypto adoption index, which means that even behind USA, China, Russia. So what I'm trying to say here, there is a huge potential over there for even the usage of the cryptos. And if we can come up with a good idea of social cryptos, that would be magnificent actually. Talking about the specific regions, so we have initiatives like Fintech Hive. I already mentioned about Bahrain. Saudi Arabia is looking into it very much deep. I think that in that sense, the supply side will also be filled up actually.
Perfect. Thank you very much for this comment. Now I would like to turn to Muhammad, and I would like to ask him about how does Islamic finance create impact, and how does it promote the achievement of SDGs? Would you please tell us more about the enablers and the challenges as well in order to promote the achievement of SDGs?
Yes, I think we started with that in the very beginning, that there is a perfect, I would say, congruence between the SDGs and the Maqasid objectives of Sharia as we understand. And we see in the Islamic finance space as well, the mainstream players that are moving more and more towards a Maqasid-driven agenda, moving away from a compliance-based agenda. So when we started out in the Islamic finance space, most of the institutions that will talk about compliance alone, where you basically ensure that your products are halal and they meet certain criteria for fiqh, and then that's good enough for you to be a major player in the Islamic finance space. But over the years, I think there is this, thought processes have changed, and the industry leaders have started thinking more and more in terms of, responsible finance, as we know, or socially responsible finance, and mainstream Islamic financial institutions there's a growing understanding and realization of their need to address or do things, do good, which will perhaps help the countries move in the path of SDG realization. When it comes to the social sector, of course, I've just told, there is a perfect, if you talk about an awqaf, for example, historically also we have seen in the Ottoman awqaf, which were the most prominent awqaf that have been documented. And there have been recent some publications which give you a very clear view of the kind of awqaf that existed during the Ottoman times. And you will be surprised to note, and we did a small study of mapping, that most of these awqaf, they could be mapped to one or most of the 17 SDGs. They were pursuing the SDGs even without being aware of it or without being conscious of it. So historically, awqaf have always existed, and they have been used to achieve what we call the SDGs. But they were being targeted in a different framework called Maqasid al-Sharia. They knew what Sharia wants from them, and this were done. So I think the framework is there, and you need the challenges, of course, in terms of technology and in terms of humans. The people must get to know of this. The public financial literacy is a big challenge, what we call Islamic financial literacy. The fact that it is a religious duty for us to be concerned about climate. I'm sure not many of us are concerned about it, but there is a growing awareness, and this is what creates all the opportunities. Thank you.
That's a good point. Farouk, would you like to add anything about that?
No, sorry, thank you. Nothing about my side.
Thank you very much. What about you, Rislina? Could you please tell us more about also the opportunities you see, like when looking ahead, what opportunities do you see in terms of Islamic fintech and Islamic finance in the post-pandemic world?
Okay, I think as I mentioned earlier, pivoting to digital is inevitable for the survival of everybody. We see that across all players, whether it's your individuals, whether it's the corporate themselves, banks, everybody would have already created or established a department for digital transformation, or head of excellence, they call it. So it's looking at how everybody can work together in harmony in support of digitalization. So for Malaysia, we've embraced this cashless society. In the respective budgets that has been announced by Banegara, there's a lot of incentives to encourage Malaysians to have their own wallets. Even when you go to buy e-commerce, there are certain restaurants, or even when you shop online, there are incentives to choose e-wallets instead of deduction from your bank accounts. So that provides or funnels people in pushing them to digital adoptions in support of this cashless society. So, and I think a lot more will happen in the future as everybody looks at how we want to competitively bring down pricing, right? So when you talk about disruptions, is to support affordable prices for solutions for the unserved and unserved, and that's what financial inclusion, that's what social impact is about. Facilitating that to, yes.
That's a very good point, and thank you very much for your answer. I have received 2 more questions, that's why I'm rushing to ask both of them. So the first question is, in Maqasid Sharia, there is protection of wealth, and Islam also encourage for Islamic finance institutions to gain profit out of it. In your point of view, how can Islamic financial institutions find an optimum balance in achieving Maqasid and profit at the same time? Would someone like to reply to this question? We have 4 minutes more.
Let me just start with it, and maybe other respected panels can chip in. So I think there is one misconception that financial institutions, Islamic financial institutions, are different entities. In the modern era, we have a corporate culture where you have multiple shareholders. So actually, Islamic financial institutions have shareholders, and they have the responsibility towards them. So in that sense, like if they are even making some profits, actually they are making profits for their shareholders. So that is basically one point I wanted to raise. But of course, I agree with the notion that in the broader perspective, Islamic financial institutions should not be just focusing on their shareholders or the owners of the entity, but rather they should be having a broader approach of including all the stakeholders. So that is basically the approach I would like to suggest to the Islamic financial institutions. I think that in that sense, they can strike a balance between profitability and also the social and ethical aspect of their business.
That's a very good point. So we have 2 more minutes before the end of our panel. So I would like to ask each one of you to wrap up and give us like 30 seconds, give us like your last remarks, your last opinion about this topic. So I would like to start again with you, Farouk. So the last one, like as a closing remark, what you would like to say?
I would just quickly say that when there was traditional finance, Islamic finance came in as a champion of social and ethical financial alternatives, and it was a disruption in the beginning. But then fintech came in as a disruptor to both the traditional sectors, Islamic and conventional both. And now we have Islamic fintech, which is disrupting all these 3 sectors, because now Islamic fintech has all the bells and whistles it needs. For example, like it is on one hand is the champion of social and ethical finance, and on the other hand, it's technology. So I think that this is the future, and I think that we need to have more regulator government support on that, so that like we can prosper and expand the Islamic finance horizon in that area.
Perfect. Roslina, what about you?
Okay, so I mean, historically for Malaysia, right, connecting the dots to zakat and wakaf has been quite a challenge. So now with the innovation of technology and advancement, I seriously believe that we can now create that bridge in solidifying the approach in connecting, serving the unserved and unserved with the capital that we already have within the systems in support of facilitating financial inclusion and also social finance. So if I can just quickly just give one example, if I can circle back to that example that I gave earlier, right, together under Cash. So you have onboarded say five. So if the Lembaga Zakats agree to give say 5,000 ringgit to support 5 ladies, so everyone gets 1,000 ringgit, right? So if we can choose to either package it together with takaful coverage or look at existing incentives that we have within Malaysia. So the government launched the Pelindungan Tenang coverage. It's given free by the government, so it's a voucher, but the penetration for the takaful itself has been very, very low. So if we can package it together, so these women, naturally your disposable income would have been extremely low. So having a medical coverage will be the last thing on their mind, right? Because they just need enough money to put food on a table to pay for their children and also rental example. So if we can package it together, this Pelindungan Tenang, which is free given by the government, it then automatically embraces them into the takaful world, which they never would have thought of from the beginning. So these are some of the technology innovations that's currently happening in Malaysia, and we hope to create more of the success story moving forward. Thank you.
Thank you very much. Mohammed, now your side, we're running a little bit late, so I would like last quick comment.
Thank you so much. What I would like to underline is that social impact is of critical importance, should be under focus when we try to design a financial system with all its components. And social impact should be measurable and manageable, because what cannot be measured cannot be managed. And fintech offers us the opportunity to leverage technology for measuring impact and managing impact. So I think that should be a critical direction for fintech, for Islamic fintech to go for. Thank you so much.
That's a very good point about the measuring, and thank you for raising this. So from my side, I would like to thank you all for answering to these questions. Thank you all for tuning in today. It has been a very interesting conversation. I would like also to thank UNDP for having the honor to moderate this panel and also for organizing this event, and also all the people working for this organization, because they have created an excellent event in terms of organization, but also like the topics and the agenda has been amazing. Thank you all for being here today. Thank you all for tuning in. There are much more to come in today's panel, in today's conference. So please stay with us for the next panel that is about impact assurances and measurement in Islamic finance sustainability agenda. Thank you all, and please stay for the next session. Goodbye.
Assalamualaikum.
Thank you so much. Assalamu alaikum.
Thank you so much. Assalamu alaikum.
Alaikum salam wa rahmatullah. Thank you very much, Ms. Sofia Karadima, and our esteemed panelists for that session. Ladies and gentlemen, we do apologize for that slight glitch during Dr. Farouk's presentation, where we had echoes while he was speaking. Our technical team, both here and on his end, were trying to fix it, but I think, as they say, expect the unexpected. So one of the things that tend to happen is a technical glitch during a presentation that's about fintech or tech in general. So anyway, thank you so much again, panelists, for the session. And we had quite a lot of questions coming in, and I believe we have at least two or three more questions that were not answered. I would like to humbly ask the panelists to perhaps reply via text to those questions. That will be really helpful and grateful for our participants, inshallah. With that, ladies and gentlemen, our next and final panel session is entitled Impact Assurances and Measurement in Islamic Finance's the Sustainability Agenda, where we will be talking about the current industry culture and practices, existing programs and strategic frameworks in Islamic finance and Islamic social finance, and more as well. Now, with us today, we have Sarah Lisa Orstevic, the SDG Finance and Impact Specialist at UNDP SDG Impact, Nick Sharizal Sulaiman, the Partner and Islamic Finance Leader at PwC Malaysia, and Mr. Muazzam Mohammed. He is the CEO of Bank Islam Malaysia. Now, to moderate this session, we have with us Mr. Yusri Yusof, the CEO of Islamic Banking and Finance Institute of Malaysia, or IPFIM. He has more than 27 years of experience in various developmental aspects of the financial industry. Prior to joining IPFIM, he has served in the Association of Islamic Banking and Institutions of Malaysia, or IBIM, Bank Negara Malaysia, the Islamic Financial Services Board, or IFSB, as well as Securities Commission of Malaysia. With that, please welcome to the screen Mr. Yusri Yusof.
Thank you, Azuddin, for the introduction. Assalamu alaikum, and a very good day to all participants who are joining us today from Malaysia and various parts of the world. We are in the final panel session for this conference, the last dot to be connected, and we'll be discussing impact assurance and measurement in Islamic finance sustainability agenda. Over the course of 2 days, the speakers and panelists of this conference has brought to light and reaffirmed the link between Islamic finance and sustainability, and how there are much potential for Islamic finance to drive social impacts agenda, particularly in the effort to implement SDG and ESG principle. This brings us to an important aspect of the discussion. Are the initiative that has been implemented or will be implemented achieve the desired outcome? Is it effective? Is it true to level? How do we assure this? One approach that has been put forward is to address this is for institutions to undergo some form of assurance framework or measurement mechanism with the goals of helping this institution to track their progress and to ensure that the accurate and correct information is provided to the stakeholders. In fact, in one of the strategies in the recently launched Bank Negara Malaysia Financial Blueprint, one of the strategies is to develop an environment for effective stakeholder activism through improvement in the quality and usefulness of impact-based disclosures. Therefore, this session aims to discuss these matters with specific focus on Islamic financial institutions. We are fortunate to have with us today 3 esteemed panelists to articulate and to give greater understanding on the topic. The first speaker is Sarah Lisa Orstevic, the SDG Impact Specialist from UNDP SDG Impact. She's based in New York And in her current role, Sarah works with a global team of experts on SDG impact standards and SDG investor maps. Sarah and her team aims to encourage more sustainable decision making and to promote greater implementation of Sustainable Development Goal principle. Sarah is, however, unable to join us today due to geographical location, but has provided a recording on her views for us to listen to after this. Our second speaker, we have Nick Shariza Sulaiman, a risk assurance partner and Islamic finance leader of PwC Malaysia. Nick has more than 20 years of assurance and advisory experience. He has been involved in many Islamic finance and ESG related projects in the country, having assisted clients to achieve their sustainability objective and aspiration. And finally, last but not least, we also have with us Encik Muhammad Muazzam Muhammad, Group Chief Executive Officer of Bank Islam Malaysia, the only Islamic bank listed on Malaysian Stock Exchange, Bursa Malaysia. Muazzam has more than 25 years of experience in the field of finance, audit and consulting, and currently the chairperson of Value-Based Interpretation, BBI community of practitioners of the Association of Islamic Banks and Financial Institution Malaysia, IBIM. Therefore, to start our panel, we will first hear the recording from Sarah Lisa. I'll pass over to the organizer to run the program, the recording.
Hello, everybody. My name is Sarah Lisa Erstavik. I'm the SDG Impact Specialist at UNDP's headquarters in New York. I'm very happy to be part of this panel today, and I'm sorry I can't be there in person with the time difference. It turned out a bit complicated. But I'm here with you to talk about impact management, measurement, and assurance, and I'm very excited to have this opportunity. So as many of you may know, the Sustainable Development Goals, the SDGs for short, were agreed to by all member states of the United Nations in 2015. The SDGs are our global roadmap for a more sustainable and equitable future. The Sustainable Development Goals apply to all countries all over the world, and they cover interconnected issues like poverty, education, health, gender and social equality, energy, responsible production and consumption, peace, and more. As we stand here today, unfortunately, the world is not yet on a sustainable path. We are a long way from achieving the SDGs, and this has become further out of reach as a result of the pandemic of the last 2 years. What we see is that dominant global economic systems have evolved to maximize financial value, confusing the means, financial activity, with the ends, society's needs. Too often, we see investors and businesses seeking infinite rewards from a finite system and a maximization of financial returns with few safeguards. Consequently, very often, economic activity is contributing to a number of negative social and environmental outcomes, which create systemic risks for investors and businesses themselves, but also for the financial system as a whole, for governments, and for society. In today's financialized global economy, markets are the principal means to allocate capital, and it is therefore essential that markets become means to finance sustainable economic activity instead of means to maximize profit at the cost of social and environmental well-being and equity. If financial systems can become facilitators of economic activity in ways which support an inclusive and sustainable real economy, we may be able to meet the goals by the deadline. Islamic finance is an exceptional entry point to accelerate the advancement of the SDGs. By being asset-based, this type of financing forges a robust link between finance and the real economy, which is essential to sustainable development. Compared to conventional finance, we also see that Islamic finance is governed by principles of equity, participation, and ownership. It is known for safeguarding ethical principles alongside the need to generate profit and not to sacrifice the former in search of the latter. This is central to sustainability if we think of sustainability as meeting the needs of the present without compromising the ability of future generations to do the same. The good news is that interest in sustainability has never been higher, and initiatives are arising around the world, both from public and private sector, to seek solutions to increasingly pressing needs. At the same time, we see a lot of confusion around sustainability in terms of its definitions, the regulations that apply to it, metrics, taxonomies that should be used, principles, and guidelines to get you there. The risk of impact and SDG washing are high because it can be so hard to differentiate between good practice and good marketing. At the same time, practitioners struggle to find the tools and frameworks and guidelines that can best help them be more sustainable. So it's perhaps no surprise then that there's a significant gap between this growing awareness about sustainability and the tangible actions that would result in better outcomes and performance. If we take a look at the numbers, we also see this. Many of you will be familiar with ESG investing, environmental, social, governance-related investments. These rose to over 35 trillion in 2020, according to Bloomberg Intelligence. Yet at the same time, in the same year, the OECD found that there's an SDG financing gap of 3.7 trillion. That's only a fraction of these ESG-related investments. So perhaps we should think that if ESG were delivering on the SDGs, we would already have met them. Instead, what we see is that the majority of economic activity is still serving to entrench rather than end social inequities and negative economic outcomes. The title of this session is Impact Assurances and Measurements, but I would like to shake that up a bit because we see a lot of emphasis on metrics and reporting when we talk about sustainability. And although measurement is undoubtedly important, I would like to bring your attention to the other M in IMM, meaning management. Why is management important? Impact management. Because good practice precedes good reporting. Behaving sustainably and making decisions with sustainability in mind is a prerequisite for positive performance. If we focus only on measurement of performance, we risk measuring the wrong things and not really making any real changes for people on the planet. So in order to move the needle on the SDGs, the financial system needs to align its management practices with interlinked social, economic, and environmental outcomes. And on this, Islamic finance has a lead compared to conventional finance. UNDP is working around the world to help shift mindsets towards focusing on better management practices. Last year, we launched the SDG Impact Standards for private equity funds, for bond issuers, for enterprises, and we also worked with the OECD to launch impact standards for DFIs. All of the standards are compatible with Islamic finance. Another set of standards, you may ask, there's already so much out there in the market. That's not quite right for two reasons. One is that these are management standards, not reporting or performance standards. There are, in fact, no other management standards for sustainability. They are the first and only management standards for the SDGs. The second reason is that the standards help users make sense of this crowded marketplace, of the other principles, reporting standards, metrics, frameworks, tools that exist, and help the users choose the ones that are most relevant and useful to them. The standards are for investors and the companies they invest in who recognize that sustainable development is at the core of long-term value creation, and the standards guide them to get there. They are the first and only management standards in the market that allows you to consider all 17 SDGs holistically. The standards help the user firstly analyze their impact in a holistic way, and only then move to select metrics. Focusing on metrics first leads to a tendency to only showcase positive impacts, not the negative or indirect ones. However, by putting sustainability at the core of management systems, it's different. It ensures that all your decisions and your investing is done with a view to contribute positively to sustainable development from the get-go. We have a suite of supporting products and trainings that can help users adopt the standards. For example, there's a self-assessment tool on our website that any organization can use to compare its current practices with the best practices recommended by the standards. We believe that Islamic finance actors are perfectly placed to adopt the standards, thanks to their asset-based, cooperative, and ethical approaches. the management approach in the standards will actually ring familiar to many Islamic finance practitioners because of their focus on outcomes, equity, and transparency. The standards can provide further value to these practitioners by teasing out the links to sustainable development and the SDGs, and describing the practices required to embed this at the core of all management behaviors. And I have one more piece of good news, and that's that later this year, UNDP will launch an assurance system to verify and recognize successful adopters of the standards. This will make it possible to authenticate any organization's internal practices and confirm that they are in line with sustainable development and therefore are most likely to be creating positive impacts that benefit not only themselves, but people and the planet. Organizations around the world have started to adopt the standards. We know of PE funds that are integrating the standards into designing new impact funds. We work with enterprises that are working with our self-assessment tool to do gap analysis and create action plans to align their practices with the standards. And we also have a great example from Japan, where the country's largest rating agency, R&I, used the standards to evaluate the city of Kobe's contribution to the SDGs. The standards allowed them to focus on the city's internal processes and decision-making practices towards sustainable development beyond a simplistic assessment that could have amounted to checking boxes. So I'd like to just leave you with a last thought, and that's that UNDP is looking for champions from Islamic finance to adopt the standards and set the example for others. So if you're interested in learning more and working with our team to adopt the standards in your organization, please get in touch. Thank you so much for your time, and I wish you all the best for the rest of the panel.
That was a very insightful perspective provided by Sarah Disa. It certainly has set the tone for the discussion. As a follow-up to Sarah's presentation, I wish to ask both panelists these questions. The first one is basically, is the trend of rising interest of sustainability also observed among financial institutions in Malaysia? And if so, what has been the drivers for this interest in sustainability? Perhaps we can start with Nick first to give your perspective, Nick.
Thank you very much, Yusri. To answer your question, I think the focus or the movement towards sustainability is not just limited to financial institutions. However, what we have seen in terms of trends is that in many countries, financial institutions tend to be one of the earliest sector that adopt sustainability. Part of the reason is regulatory. So, for example, if you look at many regulatory jurisdictions, many regulators are insisting banks and financial institutions to start disclosing their initiatives on climate risk management. For Islamic banks in this country, we have VBI, value-based intermediation. So because of the regulatory environment, then we tend to see that financial institutions tend to be the earliest sector to get into the trend. But having said that, I'm starting to see that this trend has been it has also expanded to many other sectors, including plantations, constructions, and the rest of it. Thank you very much.
Okay. Thanks, Nick. Mozan, what's your thoughts?
Okay. Assalamualaikum. Good afternoon. Thank you, Brother Yusri. Indeed, like you mentioned, and I also echo Nick's point of view, is that sustainability is currently a mainstream agenda. Yeah, and of course, what we see is that, like Nick mentioned, due to some regulatory pressures as well, it started with financial institutions, but definitely it needs to be something that cuts across. Because to follow up on the points by Nick, why it is important. I mean, obviously we understand about the impact of climate change, but at the same time, we also see from the perspective of policies and also regulations in countries. And when we talk from the perspective of our economy, where companies are going global and all that, we have seen a lot more in recent months. For example, that how failing to ensure labor rights by manufacturers can lead to termination of business contracts and import bans. For example, we've also seen, for example, where lapse in governance process by a public listed company have resulted in severe investors' backlash and negative publicity. We have also seen, for examples, that directors are, voted out and managements are asked to exit, by big companies following criticism of climate strategy by, activist groups and all that. So, I mean, for us as a bank, as well as other businesses, I think this is something important that we take heed of, because to give an example, the impact and implication for our bank, for example, a lot of customers are getting a lot more aware regarding the sustainability and all that. And to give perspective is the financial institutions and Islamic financial institutions, we are an intermediation, right? So we have customers who trust us with their monies, in their savings deposits, in their investments, and they expect us to mobilize that funding that they provide to us in a right way, channel, in financing businesses that embrace sustainability and all that. So if we as bank do not channel it in the right way, I mean, we might risk losing these customers, for example. So I mean, that's our perspective, my perspective of why it is getting prominence and very important.
Okay. Thank you very much. So it's interesting that you say that in Malaysia, partly some of these SDG agenda is currently driven by regulators, right? But perhaps maybe you can also articulate a bit more in terms of the challenges when you observe more the financial institution undertaking the sustainability journey. Perhaps Nick, can you just share your thoughts on this?
I think whenever there is a new framework or new expectations on any industry, typically the challenges would be the time and resources that it takes to adopt or to comply with that new expectation. And I'm not just talking about sustainability expectations. Even when we talk about new accounting standards, there will be an amount of time and resources that needs to be invested to basically get compliance with those framework. But I don't necessarily see this as a bad thing, because as in anything which is worthwhile pursuing, you do need to put some resources and investments into it. But just to expand on that particular point further, I think I really like the point that Muazzam raised earlier, the reason why the topic of sustainability has become more and more mainstream. And I think that the best way to explain this, I feel that if you look at the journey, the history during the last 20 years, in my view, sustainability has morphed or transformed from being purely ethical or philosophical kind of conversations into a political and regulatory and financial based kind of movements. Why? I mean, if you look at COP26, you have governments getting together, how that commitment gets translated into laws and regulations, and how it gets translated into regulatory framework. So we start to see that movement coming in. And like Muazzam also say, people, shareholders, stakeholders are becoming more aware about these issues. I see this, as a good sign, which means that because of the expectations are higher, then there are a lot of things which market participants have to do in order to conform to this framework. But I think it's a worthwhile investment. Thank you.
Okay. So Muazzam, when we talk about this transition, do you think there's any unique challenge for Islamic finance institution to actually start embarking on this journey?
Okay. Thank you. Basically, just taking from our perspective, financial institutions to undertake our this journey of sustainability agenda, the first thing that it requires is actually a significant shift in terms of mindset, because it entails a steep learning curve. across our stakeholders, not just an institution, but I think that the stakeholders around us, because sustainability is not a journey only for the management of the institution, but also for the shareholders, for the board members, for the employees, for our corporate partners, clients, and customers. And on a broader context, the financial sector alone cannot push sustainability agenda, right? When the real economy as a whole lack determination or even readiness to adopt sustainability agenda, because at the end of the day, we are just one component within the whole ecosystem. And as we heard DG Rashid mentioned yesterday, it requires all parties to be able to move this agenda. So that's why, like, government, policymakers, regulators, you know, and also industry players, and also the markets must push sustainability across all industries. Yeah. And if I could share, Brother Yusri, basically, it's for this reason, as an industry player, personally, I really welcome the introduction of this value-based intimidation VBI by Bank Negara Malaysia. That was also mentioned by DG Rashid yesterday. It was introduced back in 2018, because it creates a response, a common vision for Islamic banking industry in Malaysia to strengthen our role and impact in driving sustainable development. It's where industry players come together. Because, you know, similar to the SDG impact standard that Sarah just mentioned earlier, right? That this VBI guides the implementation of sustainability agenda. And it was introduced to assist Islamic banks to integrate these long-term value creation strategies in a more comprehensive and structured way into our, you know, typical banking activities, right? Why I say this? Because VBI basically adopt the principle of, you know, what we're familiar with, the triple bottom line, you know, similar to the ESG, SRI, ethical and responsible finance, but also in a very unique way, because it derives these principles from the underlying values and the moral compass and priorities which are based on Maqasid Sharia. And, you know, this has been spoken about by our panelists in the earlier session, right? So VBI is essentially defined as an intermediation function where the banks, intermediary, that aims to deliver the intended outcomes of Sharia through not only products and services, but also practices and our conduct. And the aim is to generate positive and sustainable impact to the economy, to the community, to the environment. Yeah, and we achieve this by being consistent with also meeting the shareholders' interest of sustainable return and their long-term interest. So in essence, VBI promote a holistic observation of Sharia by ensuring that, you know, Islamic banking practices and offerings not just comply with, you know, in the form of, you know, the Sharia contract requirements, but also deliver the higher purpose of Sharia, which is revolve around preservation. And to ensure this effective realization of our sustainability agenda, we know that we need to adopt what we would call a whole of bank approach to adopting this VBI. So it's not just a slogan, it's not just a campaign, right? So what we do, or what we did, and what we have started to do was to place this VBI at the heart of our business model and work from there. So in a way, I mean, from our own experience in Banking Islam of embedding this back in 2018, 2019 onwards, it's also a process of introspection, looking at ourselves and looking at the end of the day, what are we meant to deliver, the reason for our existence basically today. So what it has done is basically it has inspired us to, you know, to focus more on the longer term and the wider objectives, right? To consider both the financial, which is important as a listed institution, but as well as the non-financial aspects of our performance. It requires us to innovate, to create values for all, and not just, you know, one segment of our stakeholder, but for all stakeholders. It also requires us to demonstrate good conduct from voluntary impact-based approach and not just disclosure, because that's what the regulation requires, right? And it also encouraged us to have meaningful and also active involvement with all our stakeholders. So what we've done, if you can share, is that to ensure that consistent understanding across all stakeholders, because I mentioned just now that everybody needs to be on board here. We have gone back to the drawing board. We have redefined our vision and mission in early 2019 for Bank Islam, that in order to provide us as a clear compass to all elements of our business and give us a higher sense of purpose, knowing that, for us, for our management, for our employees, that we're here not just to pursue profit. I mean, that's very important, right? Because we are a commercial institution, but also we are here to create positive and sustainable impact from our banking activities. So what we've done is that for our vision, we have tweaked it to be the bank that advances prosperity for all. And our mission is providing solutions that deliver value. We also introduced a tagline of assuring trust, delivering value, because that carries our promise of good governance, our honest conduct, ethical decision making, and to cultivate high-performing organization culture that support this vision of VBI. We've also redefined our core values, and there are 4 of them. Is think customer, act with integrity, advance beyond, and take charge. So that has been our journey, basically, to embed it as as part of our business. Thank you.
That's a very interesting articulation of what Bank Islam is trying to do. Perhaps, Brother Muazzam, can you share, in terms of what Bank Islam did to actually get all the stakeholders to be in line in terms of this VBI? Because VBI itself is, if you look at the document itself is actually quite philosophical, if you can use that word. How do you actually make it practical so that all your stakeholders can embrace this and say that let's move forward, especially at your board of directors and all?
Yeah, definitely. I mean, the thing is that because we understand the principles and it's very much aligned to what we really stand for, right? So it gives a lot more focus on what matters for us. And obviously, the good thing is for us, because we are a stand-alone institution, so it's a lot easier for us to steer. I mean, there's a lot of guidance that we've gotten from our regulator in doing this. But more importantly, I would like to stress here, because we're not in this journey alone. So we have got this a community of practitioners that you mentioned just now, VBI, of fellow Islamic financial institutions, where we learn from each other, we get encouragement from each other on how we embed it and how we show the results, basically. And that creates, traction in terms of the results becomes more visible, noticeable, and that gives encouragement to say that, yeah, we're on the right track. And we are, trying to reflect the beauty of Islamic finance beyond just the offering products that meet the Sharia contracts.
Thank you. I have this question for Nick. I think Muazzam raised this discussion about BBI. As someone, a professional from outside looking into the industry, have you seen any difference since BBI was launched since 2016? I think if I'm mistaken. Do you see any traction among the players in Islamic finance in terms of the implementing BBI?
Yusri, that's a wonderful, complex question to answer. I think it goes back to how one defines difference. I think if I use the yardstick of more further disclosures describing what Islamic banks are doing, yes, I think definitely we can see a huge difference there. A lot more disclosures in terms of how Islamic financial institutions manage the risk, in terms of how they interact with stakeholders and the rest of it. Now, in terms of, does it actually basically make our environment better? Does it help with climate change? Does it help with the social issue of wealth inequality? I think that objective is, a lot more complex. But I think, some steps are better than none, but I definitely think that more can be done to go there. But just to expand on that point a bit, I think Yusri, earlier you mentioned about challenges, and I would like to link that to the question that you're asking me right now. I think one of the key challenges whenever we talk about sustainability and also corporate sector and economy in general, to me, to put it simplistically, is the conflicts between economic growth and sustainability and doing the right thing. I'm not saying that it happens all the time, but there are various permutations to this scenario. For example, let's say if that particular business has both doing the right thing, being sustainable, being friendly to the climate, and economic growth at the same time, then we don't have any issue, because then all the objectives, all the activities are aligned. But what if economic growth conflicts with the objective of sustainability? Because as we can see, let's take environment, for example. Many economic activities actually produce emissions. And sometimes some of the most profitable economic activities involve cutting down trees and produce mining and produce a lot of emission. But if you stop that altogether, then that would result in impact to our economic growth, which could lead to unemployment, which then would affect the social bit of the equation. So to me, that is the key challenge. It's about balancing these various levers of objective and trying to find the right balance so that you can have a sustainable growth. Thank you.
I think that's a brilliant answer to that. Okay. Now I want to go a little bit in terms of a little bit on Islamic finance, right? One thing that we have established through this conference is that SDG and Maqasid Syariah is aligned, right? I think from Bank Negara, from SC, even the chairman of SAC, Tan Sri Daud Bakar, said that is aligned, right? But we want to hear maybe from Muazzam and even from Nick, if you can actually come in into discussion, is that how do you describe the reconciliation between sustainability dimension and the Islamic Bank duty to uphold Maqasid Syariah or Sharia objective? Is it addressed separately, or is it done together? What's your thought, Muazzam?
Yeah, okay. Thank you. I think we've heard. Probably I may not want to repeat, but probably I would echo what was mentioned by DG Rashid yesterday, because at the end of the day, and I agree fully that if you look at the SDG, I mean, most of them, if not all of them, are already aligned with the Maqasid Syariah. So obviously, yes, the answer is Islamic banking principles are indeed aligned with sustainability agenda, because Islamic banking by nature is a form of faith-based banking, according principles of Sharia, right? And that principle always revolve around preservation. I mean, there's a misconception when you talk about Sharia is about prohibition, prohibition of riba and all that. But there's also a bigger emphasis about preservation. And Islamic banking, in essence, has this natural duty to generate positive and sustainable impact from the banking activities, to extend to the wider stakeholders, while ensuring at the same time that people and planet are not jeopardized. So obviously, I mean, any economic sector that gives harm to people, harm to their health, for example, harm to their intellect, or harm to the environment, definitely these are areas where Islamic banks, not only now, but even for us back from 1983 that we started, we have never come close to this kind of, never support this kind of businesses if they are out there, right? So that Islamic banking has inherent considerations that extend, sustainability and probably beyond that, to include being ethical, being responsible, transparent, green, equitable, which these are all consistent with universal values, right? So for this reason that, I believe that Islamic banking model that we have can naturally converge with sustainability agenda to become a true sustainable banking model, because Islamic banking is not merely an alternative to interest-free banking model, but it's a sustainable banking model that offers Sharia-based solutions, that deliver higher purpose of Sharia. But I also would like to address that there's also this misconception to say that why are Islamic banks that we're seeing now may not be addressing some of the topics which are important to all of us. For example, things such as serving the underserved and all that. And I think we need to understand that when we talk about Islamic banks, licensed Islamic banks and all that, there's certain regulatory requirements around it and certain construct to it, right? So even for us at Bank Islam, at the end of the day, when we look at it, I did mention to say that we put VBI at the heart of our business model, but at the same time we say that, how can we in our own form, in our own existence, be able to address this financial inclusion agenda? And one of the things that we look at is actually on the funding perspective of it, because just to share, I mean, there was a panelist earlier that talks about, Islamic banks taking care of the shareholders and all that. But the perspective of Islamic financial institutions, including Islamic banks, commercial banks like us, I did mention that we are an intermediary. We are in intermediation, right? Where we pull fund and we apply this fund to support, businesses that require funding. But not all the funds that come to the Islamic banks are from shareholders' fund. We were talking as though all the monies are funded by shareholders. Actually, I mean, if you look at the normal system that we have, out of every $10 of funding at the bank, say $9 actually belong to the depositors. Probably $1 belong to the shareholder. Right? I mean that's the construct. And when you talk about this perspective, the bank has this duty, to protect at all costs this depositors' money. So because of that, there's certain parameters of when you talk about credit metrics that the bank has got to observe, so that no matter what, you can preserve this interest of these depositors that we have got here. So when we look at it, we say that if you really want to address, the financial inclusion, being able to support the, what is perceived as slightly, lower credit worthiness of this underbank and all that, and we say that we want to be able to do that, we turn to social finance instrument to be able to do this, right? Because we know that we cannot do some of this serving the underserved using purely fund from the depositors pool. So we're looking at social finance instrument, and that's the beauty of Islamic finance, because we have got access to that part of capital that could be when alhamdulillah we are able to prove it. We can structure it that it can be risk absorbent and all that, and because of that, I would like to share as well that we are able to offer products, for example, on purely Qardul Hasan, purely on to small microfinancing, and these are all products which are approved by the regulators. I mean, we can structure it because of the way how we look at the funding. So I think there's more that we can do, and the realization of why we need to do this really comes to us. Because we look at, again, if I were to dial back what I mentioned just now, we look at the reason for our existence. What do we need to do? And we find a solution to it. And alhamdulillah, for Islamic banking, we've got an instrument that we can use, this instrument of sadaqah, zakat, and waqaf, right? Special financial instrument that we can blend with traditional banking instrument to be able to offer solutions for this underserved. Thank you.
Fantastic. I have this scenario. I want to give it to Brother Nick. Yeah? Okay. Muazzam has actually articulated, right, in terms of what Bank Islam has done, right? The VBI, and in fact that Bank Islam is already, to a certain extent, showcased the example of blended financing, where social finance and mainstream finance are coming together, right? And he is a listed entity, right? In fact, Muazzam, Bank Islam, you are actually the most regulated entity, right, in Malaysia, I think. You regulated by SC, Bank Negara, Bursa Malaysia, and all that, right? And his has a his shareholders meeting coming, AGM, right? And shareholder said, okay, can you do a report? I want it to have an assurance that you comply to this. So he comes to you, Brother Nick, and say that, can you do this thing? Can you do that? Can you come up with that assurance report? Say that, yep. They have actually, whatever that they have said, they have already done it through to level. Is there a framework available currently, Nick?
Yes, but the framework is evolving. I think the answer is yes. I think that the key question is more about what are the specific information that which is subject to external assurance. But let me just give you some statistics. I think based on the data that I've seen last year, for example, if you take United States S&P 500 companies, only about less than 30% of the companies which has sustainability report actually subject their report to external assurance. So of course, the first equation that needs to come in is these organizations need to engage external assurance. I think in the first place, I think that trend is growing, but right now there is no mandatory requirement for the sustainability report to be subject to external assurance. I think number two is how exactly that external assurance to be conducted. So for example, we've seen there are standards for this. So for example, that many people in the profession, they use ISAE 3000 to provide some level of assurance on the data in the sustainability report, but the requirements are evolving, and this is definitely one of the hot topic which the accounting and auditing profession are discussing right now. But the short answer to your question, Yusri, the answer is of course yes.
Okay, fantastic. Just a little bit more, Nick. Say, for example, suddenly there is a surge of demand, right? For this, for assurance to be given, right, to banks and all that. Do you have the capacity to do it in Malaysia?
I mean, of course. I mean, it depends on when. So,
okay.
I mean, of course, capacity, can be built over time. Right now, as in any business, any auditor's accounting firm, we base our capacity on the current demand, but we do see that there are a lot more direction towards this. So, I'm always a big believer that we have plenty of talents, in this country. So I think capacity-wise is just one of the enablers that that we need towards that. But I think the most important topic is the willingness of the organizations and companies to engage for external assurance.
Okay. So it's just a matter of when, right? It's basically everything is ready. In fact, framework is almost there. The banks are already undertaking some of the sustainability agenda. And I think we have some questions, a few questions coming in, quite a lot. Okay, maybe this is not really related to assurance, but we have this question. Maybe I can pass this to Brother Muazzam, which I think quite also good to answer this. Could you tell us the main difference between normal Islamic finance method and Islamic social finance?
Yeah, okay. Probably I can address it from the context of what we traditionally see in Islamic banks prior to this, right? Because like I mentioned just now, I mean, Islamic banks, the construct, we are intermediary, and we are funded typically largely by depositors depositors money. I mean, these are savings account, current account. That's what I meant by depositors money, right? And the proportion is something like that. For every $10 of on the balance sheet of funding to the bank, $9 could come from the depositors fund, and $1 could come from the shareholders, or roughly like that, or 8 and 2, that kind of thing. But it's always like that, right? So and traditionally that is how an Islamic bank is funded. And that why I keep mentioning that is that because I would like to share, because not all of us are bankers here, is that for an intermediary, for a bank like us, right, there's this highest priority that we need to safeguard for a bank is not the shareholder. Shareholder comes second, is the depositor, because the depositor by right should bear zero risk, basically. I mean, for a lot of it. I mean, it depends on the kind. Obviously, I qualify that to say that it depends on the kind of a product that you offer to depositor. But if you look at the context of our country, right? A depositor in a bank, these are not high net worth individuals. These are normal people who will keep their salary money in, and money for their household for that month and all that, right? So these are not money that they are willing to risk. They are not prepared to risk that money to get higher return. What they require is that the comfort that the amount needs to be protected, right? And with that kind of risk requirement or appetite by the depositors, that's where the bank decides on how do I apply that funding, right? I'm just saying here is that I want to sort of relate why using the traditional model of an Islamic bank that we've seen in the past, that's why it's not easy for Islamic banks to go and be able to serve this underserved because of the perception of the lower credit worthiness, right? So that would be the normal construct. But like I mentioned, the beauty of Islamic finance is that there's also ability to access for that. But obviously, to get the funding from Islamic social finance instrument, you need to go to different sources, obviously, right? And that's why for us, what we have done is that we create this financial inclusion division and we create Center for Social Finance for us to be able to mobilize funds from social financial instruments such as sadaqah, zakat, and wakaf. What it means is that we've got to work in a collaborative manner with the institutions that are the guardians of this. Because, I mean, in the context of Malaysia, we've got laws whereby for sadaqah and for zakat, I mean, there's only certain authorities that can collect and can keep the money and, being able to distribute and all that. So obviously we need to work with these authorities in order for us to pull that kind of funding for us now to be able to apply it to serve the underserved that previously were the underserved with the intention of being able to nurture them so that they become the serve after that, right? Help, for example, we've got programs, micro entrepreneurship program, microfinancing solutions, with the aim of helping to build credit track record for this so-called the underserved segment, so that they are able to be served by the mainstream financial institutions as they grow to a certain level. So that is, I would say that the distinction of how we can use that source of funding, and with that we're able to to serve the underserved segment.
Okay, Brother Mazam, in the latest blueprint, blended finance is one of the key focus of the blueprint, right? And then among the strategy highlighted is that the need for financial institutions to engage with a state religious authority, right? Perhaps can you share in terms of experience in getting them to actually come on board, to actually be part of the journey? What was the challenges? What was the motivation for them to come on board and actually support this initiative?
Yeah, okay. Thank you so much. So probably I can start off to say that, in the period, especially when we are now, we are in a recovery mode. Like some businesses, for example, could have been severely affected and they may need additional funding to be able to rebuild their business, right? And to expect that just the banks alone to come in and being able to help rebuild that, I think it's going to be a bit difficult because I said that traditionally banks are funded in certain way and there's certain risk metrics and all that. So that's why the answer to this will be in terms of blended finance. What it means is that, say, for example, if the business require additional $100 in terms of capital, probably the $10 or $20 of it can come from the perspective of funding that can come in equity kind of mode. And the remaining, $80 can come from, for example, the traditional financing mode, right? And that becomes viable. So this is where Islamic financial institutions need to work with those agencies that will be able to provide that kind of equity injection in there. Because banks traditionally are not set up to do like equity financing and all that because of the reason I mentioned just now. But there are other institutions out there. It could be a PE, but it could be also government institutions and all that can do that. Now, if I can relate to one example of how we are doing it now, actually, it was also mentioned by DG Rashid yesterday. He gave an example about this IT card program. That an initiative that was, that was promoted by Bank Negara. It was even announced, back in May 2020, and we first introduced it in July 2020, whereby we apply this concept of blended finance. But what we've done is like this. So there are multiple parties in the effort, and the idea was we want to help these really small micro entrepreneurs to build their business, and these micro entrepreneurs. They are not considered bankable when they go to the mainstream, banking institutions to apply for financing, right? So these are our target market of people that we want to help. So what we've done is that we work with one state religious council, and mainly because we want to tap into the zakat portion for it. Because like I mentioned just now, right? In order to assist this kind of entrepreneur, it requires a blended finance. So what we've done is that, like the example that I gave just now, the entrepreneur may need 10,000 ringgit. 8,000 ringgit is given to the entrepreneur from perspective of micro finance. Yeah, so there's specific funds that we use from Bank Negara, very cheap in terms of the financing cost and all that. But the remaining 2 that is required, we use zakat money, and we need to ensure that this asnaf, that they are worthy to receive zakat, for example. So if you think about it, the person needs 10,000, 8,000 from financing that is required to be repaid, but 2,000 is from zakat money. So he or she gets 10,000, but needs to only repay 8,000, right? So that's one advantage. But the other thing that we've done is that because, we also couple it with entrepreneurship program, because we understand that for this group of people, what they need is not just financial support, it's not just funding. What they need is also from perspective of capabilities development. So what we've done is that there were 3 parties involved. I did mention that was us. There was this State Religious Council. We also work with one institution, Islamic Corporation, that provides this training and business coaching and mentoring to the participants of this program. So not only do they get this microfinancing, they also get zakat on top of it, but they also get like free training and coaching and all that. And that training and coaching basically was to teach them about cash flow management, about business management, about people management. We get them to properly register their businesses and all that. And Alhamdulillah, going back to what we mentioned just now, we're doing this because we want to see the impact. It's not the bottom line P&L, right? There have been and it has been going on for more than a year, and there has been high success rate from the perspective of those people that were participants to this program. When they were admitted to the program, they were recipients of zakat, but now they are in position that they've got to pay zakat. And to us, that is the impact that we see, right? That they elevate in terms of their financial well-being. At the same time, they have started to build their credit track record. And once they graduate from the program that we have here, they can go into the normal, like mainstream commercial financing to obtain to grow their business. And that's the beauty of us using this blended finance to be able to support this segment.
Okay, I think that's a fantastic framework that we have developed in banks. I have this one question. I think to a certain extent you've answered it, but I will just share it with you in case we can actually add more to this. The question is that it's a specific address to you, Brother Muazzam. Can BIMB shares 1 or 2 financing deals that BIMB met that BIMB has really put in place that met the sustainable agenda, SDG, ESG, and value-based financing initiative? somebody from someone by the name of Ahmad Falan Yaja. I think maybe just one or two example of success story.
Yeah, I mean, we've got a portfolio, like I mentioned just now, from the perspective of financial inclusion. We've got a program we call this Bangkit entrepreneurship program. There are 3 levels. Yeah, we've got one level which is for really small entrepreneurs that they don't have ability to get even a small loan, to even get a Qardul Hasan. So we give business grant, and this purely would be coming from sources such as zakat or sadaqah. And then slightly higher to that, one level higher, is that they are a bit bigger. You know, they have the ability to get financing, but they are still quite vulnerable. So we offer Bangkit microfinancing for them, you know. I mean, and these are range of 5,000 to 20,000, for example, right? And it's on Qardul Hasan basis. So you take 10,000, you repay over 5 years, 10,000 exactly. And on top of that, they got business coaching and training, like I mentioned just now. Okay. So that's the second level. The third level would be the IT card that I mentioned just now. Because IT card, then we start to use micro enterprise fund. It's a special fund by Bank Negara, so there's already profit being charged to it. But because they are slightly bigger, they are able to do it, coupled with the zakat money, and that's how. So that is the program. If I can give as an example of how we sort of realize, you know, the aspiration of VBI and being able to implement it in our bank so far.
Okay. Thank you, very much. Okay, there's another question here. I think maybe I'll pass this question to Nick. Yeah, I think Nick is actually the question is maybe you give your view on this question, because what the question asks is, how would banks measure that have complied with VBI or achieve SDG target? What would be your opinion on this?
I think the way that many, you know, unlike accounting standards where you either comply or not, and where there is an opinion of true and fair, a lot of these guidance are principle based, which provides a lot of flexibility for Islamic banks to describe their achievements. So I think to answer the question is to see, then it goes back to the reader, whether based on the disclosures that the person has read, whether that particular financial institution has basically met the objective or the Maqasid Sharia, or you know, and so on. But just to add another point of view on that, this is my personal opinion, of course. But earlier, Yusri, you asked about the question between similarities between SDGs and Maqasid Sharia. I think you know, conceptually, philosophically, I think definitely there are a lot of similarities. So, for example, if you look at SDG in terms of you know, in terms of strong institutions, peace, justice, education, life on earth, the rest of it, you know, definitely that it's covered. You know, all of those important issues are covered within Maqasid Sharia. But when we look at it, if we look at it in terms of practice, I do feel that many Islamic financial institutions can do more to disclose what they've done with regards to the environment, specifically with regards to GHG emission. Now, historically, Islamic banks have always been very strong and geared towards social justice, community education, and also governance. Because if you look at, you know, the whole model of Islamic banks, the fact that you have a Sharia committee, you know, as part of the governance structure, provide an excellent oversight on the Islamic bank's activity. But on the environment, I'm not, you know, of course, there are many Islamic banks that disclose this information, but generally speaking, I do think that the industry in general can do more. If we look at a lot, and I think part of this is also about environmental laws and regulations. A lot of the environmental laws, taxonomy and so on start in Europe. So because of that, a lot of banks in Europe are the earliest one to get into that. But we are starting to see that Islamic banks are starting to get towards that direction as well. So therefore, my conclusion is I think the S&G is very important, but because of what's happening with climate change, I also think that we need to put a lot of emphasis in terms of greenhouse gas and also protecting the environment. Thank you.
Okay.
If I may
yes.
expand on that, Brother Yusri, if you don't
Yeah,
mind.
please do.
I do agree with Nick to say that, I mean, we talk about sustainability. I mean, I did mention about from the social aspect of it, economic empowerment and all that, but from the perspective of climate. Now, this is a bit more, because if you consider like, even for our environment, this is something new, to be fair, not just to the financial institutions, but to the industry, to the players. It's something new to us. But there have been, in a way, strong push and strong support. And this is even, from the two regulators that we have got here, whereby both Securities Commission and also Bank Negara have jointly set up this what they call as the Joint Committee of Climate Change, right? And what immediately that we got from there was this introduction of this climate change and principle-based taxonomy, CCPT, that serves as a common framework for classification of climate risk-related exposures, for FIs, basically. Because what we need now, probably, I think, in order to be able to do that kind of disclosures that Nick mentioned, would be more of the methodology, the methods to be able to assess it. I think probably over here, what we need is more of that, for it to be a lot more objective in terms of the reporting and the measurement. And that's the reason why, at JC3 level, there's these the groups that are looking at the measurement of impact for the environmental across the different industries. And in fact, for us within the VBI group, we have also come up with this VBI financing and investment impact assessment framework, of VBI-AF sectoral guide, sector by sector, and really looking at from the perspective of incorporating of these ESG considerations, and especially in terms of the climate risk in our assessment tool. So I think that development is ongoing. So as the assessment tool are more ready and more matured and all that, inshallah, we will see a lot more disclosures on the impact to climate specifically in our reporting, inshallah.
Thank you very much. I remember when I was in Islamic Financial Services Board, I think one of the things that they've done when you look at prudential standard is, they will look at whatever has been developed by Basel, and then what happened is that they look at specific, what we call it, specificity for Islamic finance. So in terms of the disclosure or assurance, do you think for Islamic finance, would the UNDP standard sufficient, or should we actually have another level in terms of really be able to give the assurance that Islamic finance is actually operating to that optimal level that's supposed to, when it comes to SDG and all that? What's your thought? I just want to hear your thoughts on this one.
Sorry, the question is, should there be more standard to ensure that Islamic banks are... There is. I think it goes back to the objective, because right now, as we see, there are already quite a lot of standards in relation to sustainability or ESG. I can name a few, from GRI to integrated reporting, and also now we have TCFD, which is climate risk reporting. Now, my view is the more that we can leverage on international standards, the better. It doesn't mean that there shouldn't be new standards created, but we need to look at what are exactly the gaps or the attributes that cannot be used from the existing standards. There are advantages in terms of leveraging from the existing standards in terms of comparability. We are now seeing a lot of movement and trends towards harmonization of various standards. I think to answer your question, it goes back to the specific objective. If the objective is it to come up with the standards to enable the participant to come up with a proper disclosure, I think we have a lot of that. But it goes back to the specific attributes, which one thing that may not already exist in other standards.
Okay. I think that's a very good explanation. Okay.
If I may wait.
Yes. Very much. Yes, please do.
Yeah,
yes,
probably. I think from your question, probably I can just dial back a bit from the perspective of probably what we have over there. For the time being, that would be good, because basically I did mention about the VBIF that we've got, and what we aiming for that would be through that we can improve our disclosures and solutions, because that encourages impact-based assessment, having comprehensive measurement, impact-focused disclosure, inclusive governance, and constructive collaboration. But I think I would like to also echo what Sarah mentioned just now. Probably let's not overemphasize on disclosure and the measurements, but more importantly about the management. And when it comes to management, this is something that we must believe in, so that we're not just doing something just because we want to show good numbers and lead to what we call greenwashing or impact washing and all that, right? So that's why, for us, it's always good that we go back and internalize it and build it, within our own business model, so that it becomes real and becomes sustainable. And obviously, the disclosure and all that will come from it, inshallah.
Okay. I see there's no more question. There's one directed to you, Brother Muazzam, but I don't think. But this is quite relevant to. It's actually about the fintech license. There's a digital license that will be approved, right? Perhaps it would be good also to just discuss about, because there was a discussion about fintech, right? What's the position when it comes to Bank Islam, Brother Muazzam, fintech? Are you going to actually have your own fintech set up? Are you going to actually try to get a license?
Okay. I think there are two parts to it. First, the fintech side. We welcome fintech, and in fact, our approach to fintech would be collaborative, because what we see is that from our interaction with it, we open our doors with fintechs, right? Some of them have got really novel ideas and using, the latest technology to find a solution. So there have been quite a number of collaborations that we've done, and we even announced this, where we are able to either reach our customers better or provide new solution through collaboration with fintech. So that's one part. But the other part, which would be in terms of the digital banking experience, I think Bank Negara has announced that they will announce it, I think, next month, 5 digital licenses. We do welcome it. I think that's good, because they are meant to focus on further serving the underserved. And we think that, probably there's more that, as an industry, that can be done there. So we hope that can serve that segment better. But at the same time, what I would see is that, with the advent of these digital banks and all, it also forces the traditional banks, even like us, to focus a lot more on digitalization in terms of our process improvement, decision making, in terms of the segments. There's a lot more capabilities that we develop that, at the end of the day will enable us to serve our customers better going forward, inshallah. So I think I would say it's a positive development.
Okay. All right. I think we are about to run out of time. Maybe half a second, 30 seconds each to Nick and Muazzam. Last word, wish list. How do you see, the industry going forward when it comes to assurance? Nick?
Right. Sorry, I thought you mentioned 30 minutes.
30? Oh, no, 30 seconds. We don't want.
Right. So I think we've covered quite a broad range of topic today. I mean, not just about assurance, because I think assurance is only one of the key components behind this whole value chain. But I think the most important part is for this momentum to be sustained. I do think that there is a lot of value in terms of measurement, in terms of disclosure. Maybe because I'm just an accountant, but I do believe that what gets measured do get managed. Especially when it comes to climate risk, which to me is one of the key existential crises that we have right now. To encourage the right behavior, and because of that, we do need support from all the stakeholders. I mean, not just the financial institution, but the market players, government, and also even customers, and also the capital market. So I think that is my conclusion today. Thank you very much for having me.
Thank you, Nick. Brother Muazzam,
I mean, Islamic finance is synonymous, with sustainable, and it can be a model for sustainable banking in a way. So there's a lot of potentials due to the availability of unique instruments to be able to serve the segments that previously were not able to be served in a way. And hopefully with that, we can see greater positive impact and better perspective and contribution, by the industry to the economy as a whole. Thank you.
All right, thank you, Brother Muazzam. With that, once again, thank you to the organizer for having us for this panel session. I shall hand over the session back to the organizer. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you.
Thank you.
Walaikum salam wa rahmatullahi wa barakatuh. Thank you very much, Mr. Yusri Yusof and the esteemed panelists for that great, engaging and interactive sessions. And also thank you to the participants for sending in your questions and your comments. That was a very fruitful discussion, I believe. So ladies and gentlemen, if you want to learn more on how to incorporate the SDGs into your businesses or investments for a more resilient and sustainable future, do sign up to the free online course called Impact Measurement and Management for SDGs that was created by UNDP's SDG Impact and Case at Duke University. You will learn the foundations of the SDG Impact Standards, the only management standards in the market that considers all 17 SDGs holistically. This course is only 10 hours long and you can learn at your own pace. Sign up here at imm4sdgs.com or imm4sdgs.com. The link is on your screen as well as in the chat window right now. Ladies and gentlemen, before the next speaker comes on, I would like to invite everyone once again to fill out the event feedback form appearing on your chat window right now. Let us know your thoughts on the sessions that we had, the speakers from both yesterday and today, and do let us know what you think, if you want more events like this organized by UNDP in the future, and so on. Your feedback is greatly appreciated. Our final speaker is an accomplished development professional with over 28 years of experience. He has a significant experience related to the formulation and implementation of development strategies, policies, and planning processes, and a solid expertise in managing development projects, particularly in the area of digital and knowledge economy. Would you please join me in giving a warm welcome to the head of the Islamic Development Bank ISDB Center of Excellence here in Kuala Lumpur, Mr. Muhammad Abida, to deliver the closing remarks for our event. Mr. Muhammad Abida, the floor is now yours.
Thank you very much. Bismillah ar-Rahman ar-Rahim. والصلاة والسلام على خاتم الأنبياء والمرسلين سيدنا محمد الأمين وعلى آله وصحبه أجمعين. Distinguished delegates, panelists, participants, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. On behalf of the Islamic Development Bank, I would like to congratulate and commend the United Nations Development Programme, UNDP, main organizer of this conference, and the co-organizers of the Securities Commission, Islamic Banking and Financing Institute of Malaysia, IFHIM, and the Chartered Institute of Islamic Finance Professionals for successfully organizing this conference titled Connecting the Dots, harnessing Islamic finance to accelerate the achievement of SDGs. And thank you for engaging the ISDB as one of the co-organizers of this important event. I would like also to express my sincere thanks to the organizers for inviting me to give the concluding remarks and summary of the conference. I am indeed delighted to note that this conference was successfully organized and was attended by more than 500 participants globally. Distinguished guests, ladies and gentlemen, as this monthly enlightening conference comes to a close, I'm humbled by the deep insight and wisdom of all the distinguished speakers and panelists, particularly the keynote messages from the high-level officials of the UNDP, the Securities Commission, and Bank Negara on the various initiatives in harnessing Islamic finance toward achieving the SDGs. It is clear that the overarching theme of the outcomes of the conference is recognizing that the SDGs are in full alignment with the objectives or maqasid al-Sharia. Therefore, Islamic finance, which is based on emphasizing social responsibility, inclusiveness, equitable sharing of risks, and shared societal benefits, naturally has a major role in promoting long-term sustainability and inclusive growth. It is indeed notable to recognize the pioneering initiatives by the Securities Commission in adapting the Islamic capital market products and instruments in Malaysia to support SDGs and overall stability through important programs such as the Waqf Fund for Social Development and FICRA, Islamic Fintech, which supports innovation for the Islamic capital market, as highlighted by His Excellency Datuk Sayyid Zaid Al-Bar, the Executive Chairman of the Securities Commission. Also, Bank Negara Malaysia has done noble work in promoting sustainability through adoption of value-based intermediation, VBI framework, which supports greater impact on the environment, economy, and society. It is indeed heartening to note that the Islamic financial institutions in Malaysia have intermediated over 150 billion ringgit, Malaysian ringgit in VBI-aligned initiatives over the past 3 years. Datuk Sheikh Abdul Rashid bin Abdul Ghaffur, Deputy Governor of BNM, supports in full embracing transformative change through putting positive impact as a first priority in every aspect of the financial ecosystem. It is commendable that UNDP is also scaling up efforts globally to engage countries to leverage on Islamic finance as a vital component to the overall mobilization of financing for the SDGs, including the launch of investment platform in collaboration with the Securities Commission and the Islamic Corporation for the Development of the Private Sector, ICD, which is a member of ISDB Group, as mentioned by Mrs. Yushara Monari, the UN Under-Secretary General and Associate Administrator of UNDP. Distinguished ladies and gentlemen, the three-panel discussion yesterday and today on Islamic social finance, Islamic fintech, and impact assurance were very highly informative and pragmatic takeaways. For social Islamic finance, in order to fully realize the potential of zakah and sadaqah, for example, there is a need for enhanced transparency in the collection, utilization, and impact, as well as making the most benefit of digitization, such as smart partnership, fintech, and technology interventions. It was also emphasized that Waqf has a huge potential as a development tool. It has proven to be resilient in the long term. The ISDB, through its Awqaf Properties Investment Fund, APIF, has been spearheading the development of Waqf land in 27 countries globally, with 55 projects valuing at $1.2 billion. For Islamic fintech, scaling up digital banking and the utilization of cryptocurrencies and fintech solutions are game changers in expanding the footprint of Islamic finance and hence its contribution to the socio-economic development globally. Finally, and as was discussed by the third panel today, there is a need to ensure effective management and transparent and integrating reporting on Islamic finance's performance, as well as adoption of high-level standards for impact assessment. Distinguished ladies and gentlemen, despite the promising potential and the progress made, there are still important challenges to be addressed collectively, as emphasized by Tansri Dr. Professor Muhammad Dawood Bakar. These challenges include lack of knowledge on SDGs, lack of readiness of Sharia community, and the need for more agile and pragmatic approach to achieving SDGs. In order to accelerate the achievement of SDGs, Tansri Dawood Bakar recommended several methodologies, such as to include SDGs in the framework of financial screening and financial decision, that the courage by the Islamic scholars is required to enable new product creation for special purposes, and to recognize that SDGs are an integral part of Maqasid al-Sharia, and finally, the ability to infuse Sharia compliance in ESGs and SDGs. Distinguished participants, ladies and gentlemen, before I end, once again, I would like to convey my sincere thanks to all keynote speakers, panelists, and moderators for the uniquely valuable insights that go beyond sharing of knowledge, recommending practical steps forward. My appreciation also goes to the MC of this event, rapporteurs, coordinators, and all members of the organizing team for ensuring excellent arrangement. I would like also to acknowledge the attendees and participants of this conference from every corner of the globe for interacting with the speakers and enriching the discussion. It was a pleasure and honor for ISDB to be part of this initiative in advocating, integrating, and mainstreaming sustainability in Islamic finance towards delivering sustainable impacts in a more formal and structured manner. This is indeed the future of Islamic finance as we connect the dots for harnessing Islamic finance to accelerate the achievement of the SDGs. Let me reiterate the readiness of ISDB Center of Excellence in Kuala Lumpur, which supports comprehensive ecosystem development in strategic development areas, including Islamic finance, to collaborate with all interested partners in achieving the mutual objectives of the SDGs. Once again, I look forward to continuing the discourse with all of you again in the near future. Let's keep the momentum in connecting the dots, and thank you for your kind attention. Wassalamu alaikum wa rahmatullahi wa barakatuh, and wish you a great weekend. Thank you.
Thank you very much, Mr. Muhammad Abida, for those closing remarks. Dear believers, dear viewers, I'm so sorry. Dear viewers, believe it or not, we have come to the end of the Islamic Finance International Conference brought to you by UNDP. It's been a long couple of days, so I got my tongue twisted a little bit there, but that's okay. Alhamdulillah, it was a great couple of days engaging you guys with throughout this insightful sessions and speeches. We hope that you have benefited from them. And we would like to especially thank our partners, Securities Commission, CIIF, IFFIM, and ISDB. Thank you all to our honorable guests, the respected scholars, industry experts, speakers, and of course our dear participants, without whom this event would not be possible. Once again, I would like to invite all of you to please fill out the feedback form, which is appearing on your screen right now. There we go. And also in the chat window. Please do give in some good feedback, because we would really appreciate it to help us improve future events, inshallah. Now, on behalf of the organizing committee, I would like to apologize for any shortcomings throughout the event. And once again, thank you so much for tuning in from the start yesterday until today. And of course, just as a reminder, if you missed out any points or any sessions from our event, the video is available on UNDP Malaysia's Facebook page on Facebook, right? So that's it. My name is Aizuddin, and I've been your MC, and you guys have been awesome. Shukran jazilan, terima kasih. Thank you. See you at the next event, inshallah. Wabillahi taufiq wal hidayah. Wassalamu alaikum wa rahmatullahi wa barakatuh, and have a great weekend.
With new and diverse partnerships, the world can achieve sustainable development. countries have already committed to making this happen through the Sustainable Development Goals. Each goal targets a specific area that needs improving, and they are all connected. But achieving the goals requires resources. $5 to $7 trillion needs to be raised each year. And countries are figuring out how to mobilize and use that money. The public sector is taking a whole-of-government approach, working across different ministries and actors. And the private sector is already contributing significantly to the SDGs. But more needs to be done. There can be challenges in aligning different sources of finance with the SDGs. So UNDP is helping to bring together public and private money behind sustainable development. We use 4 different approaches to do this. We map out the landscape and bring various actors to discuss targeted solutions. We advise on ways to remove blockages, build links, and redirect flows to sustainable development objectives. We help countries mobilize more money and leverage private finance for the SDGs. Working with governments and businesses, we ensure efficient and transparent management of resources for maximum impact. To benefit people, to protect the planet, and to bring prosperity for all.
The CIIF, the Chartered Institute of Islamic Finance Professionals, the premier professional body for qualified Islamic finance practitioners. Since 1963, the modern era of Islamic finance has rapidly grown to become a complete financial system with a full suite of products and services. As Islamic finance worldwide continues to grow, global demand for qualified talents becomes increasingly critical. To address this need, Bank Negara Malaysia has formulated a series of initiatives to boost human capital development in Islamic finance, including the need for setting professional standards. In its Financial Sector Blueprint 2011 to 2020, BNM identified the Association of Chartered Islamic Finance Professionals, ACIFP, to set global quality standards for professional qualifications. To realize its mandate, the ACIFP has transformed into the CIIF as part of its plan to be the global reference point for Islamic finance professionals. The CIIF will establish a platform for shaping high-caliber talents by setting globally recognized standards in professional qualifications. Together with our codes of ethics and professional conduct, the CIIF aims to shape the development of each member towards attaining recognition and prestige as a chartered professional in Islamic finance. As a chartered professional in Islamic finance, any member of the CIIF is expected to be ethically grounded, technically proficient, and above all, professionally driven. Attributes derived from the CIIF's key professional values. In achieving its vision to become the premier professional standard-setting body for qualified talents, the CIIF will be focused on 3 key strategic thrusts: supporting professional development through continuing education, upskilling, and specialization; global outreach initiatives to forge international linkages, foster collaborations in talent development, strengthen the linkage between industry and academia, and promote cross-border mobility for professionals. Achieving industry recognition through the adoption of the industry-owned Islamic Finance Profession Charter. Recognition of the CIIF's members by global financial institutions, industry authorities, regulators, education and training providers as the key players driving the halal economy. Through the CIIF, professionals in Islamic finance will have a platform to access expanded opportunities to serve the global Islamic finance industry. Through the CIIF, the talent pool will receive a much-needed boost in quality professionals to cater for a dynamic and ever-evolving global Islamic finance industry. Professional talents, global opportunities, knowledge, integrity, service. The Chartered Institute of Islamic Finance Professionals.
Introducing the Islamic Development Bank's Center of Excellence in Kuala Lumpur, Malaysia. A collaboration between ISDB and Malaysia for the benefit of all ISDB member countries. The ISDB Center of Excellence in Kuala Lumpur supports the expansion of Islamic finance, halal industry, and science, technology and innovation across ISDB member countries and globally by leveraging reverse linkage and resources mobilization to capitalize on the expertise and resources of member countries. Moreover, the Center of Excellence provides 1. Comprehensive ecosystem development solutions. 2. Value chain integration. 3. Investments and business matchmaking. 4. Access to finance, and ultimately supports the expansion of markets that work for development. Capitalizing on the advancement of Malaysia in Islamic finance, halal and SDI, and building on ISDB capabilities and global networks. The Center facilitates the exchange of comprehensive development solutions, including know-how, technology, tools, and investments between Malaysia and other member countries, while ensuring a win-win approach. 5 flagship programs launched by the Center of Excellence to be implemented during 2021 to 2023. 1. The Islamic Finance Promotion Program. 2. Halal Industry Growth Program. 3. SDI Acceleration Program. 4. 2 support programs for reverse linkage and resources mobilization. Several strategic initiatives are under implementation, including the Islamic Finance Ecosystem Development Support, the establishment of Orcaf Properties Investment Fund in Malaysia, the scale-up of Islamic FinTech and Social Finance Solutions, Hash Funds Development Support, Halal Ecosystem Development, supporting the development and production of halal vaccine, the scale-up of drones and agriculture technologies, and the launch of the e-Gateway as a virtual matchmaking platform between solutions providers and seekers in the centre's focus areas. To know more, engage with the SDB Centre of Excellence in Kuala Lumpur.